free cash flow positive sometime next year or the following year as well. But the idea tech is dead, John, I don't see tech dead.
Tom, we've had two big deals this week already. $30 billion deal between Slack and Salesforce. On Monday, it was Standard & Poor's and IHS Markit, a $40 billion tie-up. Business continues. People are getting on with it, looking ahead to 2021 and hoping for a better world.
It's going to be interesting to see, and what we're going to frame here through December is this bull and bear tug of war. What's great about David Kostin is not the Brown University acuity. What's great about him is he writes precise research notes that actually, as an adult used to do, looks out 1, 2, and 3 years. And here's what you need to know. Blended in 1, 2, 3 years out is a constant 26% lift to this market. He is at Goldman Sachs. David, good morning. I love how you go out to 2022 and you get us out, I think it's SPX 4600. How do we get there?
Well, you get there a couple of ways. You get there to around 3,700 at the end of this year. You get there to 4,300 at the end of 2021, and then you get to 4,600 at the end of 2022. So that's the path, and sort of what are the building blocks behind it? Well, basically, you've got an economy that's getting better, you have earnings that are growing, and you have the rates that are staying super low. I mean, those are the three building blocks. It's not so brilliant, and it's also the TINA trade. What is the alternative? What else is there that's out there? And equities becomes the default opportunity. So I want to think about the following way, Tom. Break the market into two pieces. Let's take the 5 big stocks that are almost a quarter of the market, and let's take the other 75% of the market. Those big 5 stocks, their sales were up 18% this year. Sales for everything else, down 5%. So that explains why these stocks were up around 50% year to date. So they had a great year. We understand that. We're looking forward. What's the path forward? These companies are expected to have revenue growth each of the next couple of years of around 15%. So that's kind of part of your leg going forward, Tom. And the second part, if you think of the other 495 stocks, they're expected to have around 6% revenue growth, top line sales growth of each of the next couple of years. So that's basically the story. It's about an economy that's getting better, coming off the pandemic crisis low, and generally getting better. The Fed on hold. That is our general assumptions. The vaccination of half herd immunity by May of next year. All that is to the positive, and I think the market is recognizing that, and will continue to do so.
David,
as it rolls
when
into
you say TINA, it just sounds like a multiple story. But when I talk to you and when I read your research, it's not just about the multiple story. It's about better earnings that you're looking for, and above consensus earnings too. David, can you walk me through why you're a little bit more constructive than maybe the consensus is at the moment, on earnings specifically?
So if we look at the earnings, Jonathan, it's a good question. So the consensus expectation is around $165 of S&P 500 earnings next year, 165, and we're at $175. What explains that? Well, part of it is a better economic backdrop. We've got GDP growth, something around 5%. The consensus expectations of 49 economists in the blue chip forecast around 3.8%. So that's a higher level of activity. There's not much inflation out there, inflation under control. So that's basically allowing companies to have that broader level of earnings growth with not a lot of pressure on input costs. So that's your margins are basically part of that is recovering. And so those are your two building blocks as we see it in our models. And the Fed has made it very clear, in our view, that they're on hold for the next 3 years at least, perhaps as long as 5 years, based on the economics forecast. And so that's a pretty benign backdrop. It's a good backdrop for the equity market. And when you think about the asset allocators, the portfolio managers out there, around 50% of the assets are allocated to equities, about little less than 25% to bonds. So what's the alternative? Cash is offering zero. And so it's still an attractive place for the equity market, Jonathan.
David, that's the index story, beautifully laid out, going out to 2022. Let's talk about a sector-level story now. The overweights in the mix for Goldman, industrials, materials, heard a lot about that. The cyclical trade of the last month has played out wonderfully for so many people who had it on. You're staying overweight information technology. Why, David?
Jonathan, I want you to think about it 3 ways. I want to think about growth, I want to think about value, and you want to think about cyclicals. The growth story is basically duration. equity duration, those longer-term cash flows at the zero lower bound, those growth in mostly technology is prized. That's worth a lot, and they're likely to outperform. You have value. The best value absolutely is in healthcare. They are the cheapest relative to the market in 40 years. You got to go back to when early Clinton administration, when they were trying to restructure part of healthcare. Look at the Obamacare period of time 10 years ago. Those are the only times that were similar. And actually, the valuation of healthcare is even more attractive than either of those two times. So that's your value trade and your value opportunity. And then the cyclical recovery, of course, is the pandemic relief coming from the vaccinations that we are assuming, and some of the industrial companies likely to benefit. So I think that's your three-pronged approach to kind of attacking the market. I think the other areas of the market likely to do less well. Financials, challenge of the flat yield curve, energy still under a lot of pressures, consumer staples, utilities, some of those other areas will be challenged. But those are the ways that I would break that down.
So what I'm hearing from you, David, is potentially adding on to what Andrew Slimmons of Morgan Stanley said earlier, which is perhaps the rally in some of the highest beta cyclical stocks, the travel sectors, the financials, areas that have gotten beaten up disproportionately during the pandemic, that perhaps has gotten a little ahead of itself. Is that accurate?
I would say certainly on the way you just, I would sort of break apart your question there, Lisa, in sense the financials I think have a challenging headwinds in terms of the very flat yield curve, the fact that there's big reserves that need to be taken for the uncertainty on potential defaults from the consumer as well as the commercial side. The Federal Reserve has made regulations difficult to actually raise dividends. They're basically most of the banks limited to prohibited from buying back stock at this juncture. So those are some of the key drivers historically that have been benefiting financials when those are in play, and they're not there right now. On the industrial side, the idea of vaccination, does offer some better opportunity for some of the travel sector and some of those industrial categories. I might point to some of the aerospace defense companies as well. I think the way to think about value opportunities is to look at the 2021 and 2022 level of profits and compare those with the pre-pandemic level of profits in 2019. So kind of make that comparison. And for the overall market, you'll be a little bit higher. Maybe you're about 7% higher. That's our estimates. 7% higher between 2019 and kind of go out to 2021. But you've got other areas, some areas where you've got really depressed level of profits. Maybe they're 50%, 60%, as much as you had 2 years ago. I think that's the opportunity for a normalization. So that's where the value we look at there, we see some of the travel and the hospitality area, they would fall into that category. Lisa, I want to pick up on one thing you said earlier. You were mentioning about credit and kind of what's happening on the equity market is telling a slightly different story from the credit market. Because if you look at the strongest balance sheet companies, they're up 26% year to date. A portfolio of those. You compare that with a weak balance sheet portfolio, they're down 1%, and that's sector neutral. So that's not going to skew towards any one particular area. Yes, you're paying 35 times for a strong balance sheet, and you're paying 13 times for a weaker balance sheet portfolio. But that's telling us that portfolio managers are not totally embracing the idea that the economy is slowly recovering and that we're sort of in the clear. And so you're seeing pockets of opportunity. And I would say if you have a view that there's a path towards normalization, some of the weaker balance sheet companies would be attractive at this juncture. And they tend to be clustered around some of the pandemic, companies that have been hurt most in the pandemic.
David, you always make it sound so easy, the path to 4,600. It's great to catch up, sir, as always. David Costin there of Goldman Sachs, thank you. That was the road towards 4,600 at the back end of 2022, Tom.
I just can't say enough about these bulls. Ben Ladler, David Costin, and the others. Boy, have they been right. There's just nothing more to say. The bears are silent.
The roaring 20s for Goldman Sachs. I hope so. Coming up, Julie Norman, University College London professor.
With the First Word News, I'm Rishika Gupta. The UK has become the first Western country to approve a coronavirus vaccine. British regulators have given emergency authorization to the shot developed by Pfizer and BioNTech. The two companies have said their vaccine is 95% effective in preventing the illness. It will be available in the UK starting next week. President-elect Joe Biden won't quickly end that Phase 1 trade deal with China. Biden told the New York Times he first wants to conduct a review of U.S. policy with Beijing, and that will include consulting with key allies. Biden also said he wouldn't make any immediate moves on tariffs imposed by President Trump. In Hong Kong, activist Joshua Wong was sentenced to more than a year in jail for leading a protest outside police headquarters last year. It was one of the most high-profile cases in the government's crackdown on the pro-democracy movement. Two other members of Wong's now disbanded political party received shorter sentences. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Right now, the full Congress should come together and pass a robust package for relief to address these urgent needs. But any package passed in a lame duck session is likely to be at best just a start. My transition team is already working on what I'll put forward in the next Congress to address the multiple crises we're facing.
That was President-elect Joe Biden on the crisis we're facing and his response that he'd like to put together in the coming weeks and months, maybe even years as well. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. The ADP report dropping across the Bloomberg in the last couple of moments. Here's the number, 307. Downside surprise, the median estimate 440. A revision to the previous read, it was 365. An upward revision to 404. So 307K, Tom. Big downside surprise, but, and it's a key but, it has not been a reliable indicator of non-farm payrolls, which comes up on Friday. And the payrolls estimate right now is 486,000, a deceleration previously from 638.
I wouldn't forget about claims tomorrow as well. Jobless claims always important, and they've really compressed right down to a key point. That'll be a talking point for us tomorrow on radio and television. Right now, Julie Norman joins us. She's at UCL in London, expert on all sorts of issues of distress in politics. And one of those, I should say, is her study of activism. Professor Norman, thank you for joining us. On the president-elect, liberals, I guess they're called progressives now, but I like the word liberals better. And then this idea of activism. What is the activism this president will face?
Well, Tom, I think that's a really good question. I think that we'll see different kinds of pressures on Biden from both the left and the right. We know that there will be, pressure on Biden to move forward on campaign promises that he made regarding racial justice and addressing entrenched inequalities. And I think a lot of that will take the form of more positive activism, the sense of like political pressure, but he'll certainly get some other kinds of pressure from the left as well, which we've already seen in some comments in response to his nominees so far. But I do think he has a very pragmatic team in place. He's putting in a lot of people who resonate with individuals kind of across the spectrum. So we'll see what kind of mode that takes.
Okay, well, then there's that Washington word, pragmatic. In what way will moderate Democrats be pragmatic with their more boisterous brethren?
Well, I think it's just going to be what the Biden administration is actually able to do. We know that they will most likely be somewhat constrained to a more moderate agenda as it is with what's looking like a most likely Republican Congress. If they are, however, able to give some nods to some issues on the progressive agenda, I think one area where they'll have the most ability to do that is with climate change. We've already seen Biden appoint John Kerry as a new climate czar. He will most likely use executive actions to unwind some of the regulations that Trump put a stop on in regards to the environment. So I think he'll do what he can in some areas that really are important to the progressives in the party. But it's also clear that he probably won't move as far in other areas that some on the left would want.
And perhaps that includes China, although this has been a bipartisan issue. We saw the New York Times interview with Thomas Friedman with President-elect Joe Biden talking about he does not plan to roll back the tariffs on China in short order. His first order of affairs will be to reestablish the ties with allies. What will the united front look like when it comes to tackling the China issue as they define it?
Yeah, well, Lisa, I think this is an area where we won't see as much of a real substantive policy shift as much as just a shift in style. The Biden administration will most likely maintain a somewhat tough on China approach, especially in regards to issues like security and technology, but they will leave some room open for engagement, again, on issues like climate change, again, on issues like trade, and also doing so in a way that's much more cooperative with allies, especially European allies, rather than just an American first approach or a bullying or strong arming of other countries.
Professor, we're talking about policy in the future, obviously. The President-elect is putting together his cabinet, and I think we're all happy to see a smooth transition starting to form going into 2021. But when the President-elect starts talking about policy in the here and now, set by officials in the lame duck session, do you think, Professor, that helps the formulation of policy, or hinders it?
Well, I think this is a challenge right now for Biden. He obviously wants to weigh in on the big crises facing Americans right now, the economic crisis and the pandemic, of course. But he has to do so in a way that's not only not impinging too far on the current administration, but also on his own Democratic colleagues in Congress. We saw yesterday even the bipartisan framework that was put forward. There was some pushback to that from both Republicans and Democrats in other areas of leadership in Congress that was kind of stepping on toes in negotiations. But I think the bottom line is that for Biden and for others who just want to see some real changes on these issues, they don't mind that pressure going forward, and they don't mind kind of having a stronger voice in that, even if it's a little bit, even if it's seen as pressure by other in their own parties.
Professor, appreciate your perspective. Julie Norman there, University College London. Professor Thomas, a delicate situation. Let's talk about that. It is a delicate situation for a president-elect to be wading in any firmer than he already is on setting policy that we need to see happen, materialize in the coming weeks.
Yeah, John, an important conversation here, and I'll be honest, John, I can't remember who it was within the blur, is the primaries of 2022. For some of these candidates, Democrat and Republican, it's not the general election of 2022. It's getting to the general election through the primary process, and that's really where the activists come in selected districts around the country.
Let me put it a different way. Tom, do you think it is helpful that the president-elect asserts himself with the existing administration and existing officials to try and make something happen before he is sworn in?
It's typical. I would say, John, within a lame duck, that's very typical for the new guy coming in to show some grace and say, let's get something done here, lame duck. Does it often happen? No. But nevertheless, I would say it's not unusual to hear that kind of language from the entering president.
A delicate time. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. As we count you down to payrolls Friday, a downside surprise on the ADP report. Not much of a move in this market. Equity futures have bounced off the lows, down about 10, 11 points on the S&P 500. We're negative 1/3%. It has been a story of dollar weakness. Euro dollar out to new 2020 highs. I think 120.80 was where we got to on the euro. Then we came back. We're unchanged on the session at 120.66. And after the move on Treasury yields yesterday, up 7, 8, 9 basis points on a 10-year, we settled down 0.9261%. What was behind that move yesterday? The fiscal talks?
Yeah.
A robust read of the ISM?
Fiscal talks.
Positioning?
That's what I think.
You think the fiscal talks,
Yeah.
Lisa?
Yeah, I do. We can discuss more.
Let's see how those fiscal talks go. See if supply does start to weigh on the long end of the Treasury curve. From London and New York this morning, good morning. This is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
From New York and London, this is Bloomberg Surveillance for our audience worldwide, live on Bloomberg TV and radio. Here's the Wednesday morning price action. Futures pull back from all-time highs on the S&P 500 and on the Nasdaq as well. We're down about a third of 1% on the S&P. We pull back by about 0.4% on the Nasdaq. Interesting part of the session yesterday for me, not the rally in stocks. We're used to that through November. It's the move in the bond market. Switch up the board. Yields higher, curve steeper through yesterday's session. The why? A few things going on. Fiscal talks back on the table. The ISM, resilient. I know the employment component was a little soft. We'll talk about that with JP Morgan in just a moment. But the data was resilient. Then there's a positioning story, which Greg Peters of PGIM weighed in on a little bit earlier. In a 10-year space right now, 0.9294%. On a 30-year, about 167. That's the bond market. I want to finish right here on foreign exchange. Earlier on today, a new 2020 high on euro-dollar, 120.80. That dollar weakness starting to come through. Euro-dollar right now, 120.69, unchanged on the session. Here's the important part of this conversation. Where's the pain threshold for the ECB? 120, 121, 122. Euro-dollar is a very narrow way of looking at this right now. It's important to look at the broader market. This is a dollar move. It is not just a euro move. It's a dollar weaker move. And when you look at euro-dollar, take a look at Euro-CNY, Euro-China. What did it do yesterday? Euro-dollar flying. Euro-China, nothing. Maybe that's a source of comfort for the ECB, Tom, in the coming weeks when it comes to the currency. Big move in euro-dollar, euro strength. Don't see it the same way against China.
No, I remember, John, 122, we really saw some discussion at 122 by European authorities. We'll see if we see it again with any further strength. Right now on the domestic economy, and John mentions ADP today, claims tomorrow, and then on to jobs day on Friday. We'll go beneath the headline numbers here on radio and television at 8:30. Michael Ferroli joins with JP Morgan, who was definitive a number of years ago in calculating a shocking statistic for our potential GDP. Michael, before a jobs discussion, do you have to reset your analysis of potential GDP after a pandemic?
So I think that's a difficult question. There are certainly aspects of the recent economic environment that would cause one to think that potential GDP growth may be slower. That said, we've seen a nice recovery in capital spending. So capital formation may be holding in pretty well here. But I think in the long run, just given the demographic trends, potential is probably going to be inching down a little bit every couple of years, just given slower growth in the labor force. And that's just due to long run demographics, not necessarily short run up and downs that we've seen over the course of this year.
So what's the run rate on non-farm payrolls? The great shock pre-pandemic was to see such good non-farm payrolls over time. What's your new run rate on NFP?
So when we get back to a normalized state of the world, which could be many years from now, we think it should be under 100,000, which is to say the number of jobs created just to absorb new entrants into the labor force. So I think the days, when we grew up, when it was 200 plus that we considered to be a normal run rate are far behind us.
So we are up against a fiscal cliff, and a number of people have come on and talked about this idea that some of the unemployment benefits are running out and will expire in the next couple of weeks. How big of a gap is there in your expectations for growth with an extension and without an extension of those benefits?
So the fiscal cliff in terms of jobless benefits at the end of the year, we don't think will be anywhere near as severe as the one we saw in August when the $600 weekly federal pandemic unemployment compensation payments ran out. So what's at stake here is two programs, pandemic unemployment assistance, which is for gig workers and other types of employees who don't normally qualify for benefits. And then this other program, which is called PEUC. Most of the PEUC people will actually graduate into state extended benefit programs. So it's really people on PUA, and they were scheduled to only have 9 months of benefits anyway. So there will be a hit here. I don't think it's going to be nearly as severe, as I said, as what we saw over the summer. But certainly it's something we believe will be a priority in any stimulus talks. Certainly we saw that in the bipartisan proposal yesterday, as it should be, of course. And this is certainly extended benefits like PEUC are something that the government has instituted in almost every recession in the post-war period.
Michael, just to turn to the ISM that came out in the last 24 hours, I think a lot of people walked away from that a bit confused. The number looked great, then the employment component was really, really soft, and this quote came from them. Companies and suppliers continue to operate in reconfigured factories, but absenteeism, short-term shutdowns to sanitize facilities, and difficulties in returning and hiring workers are causing strains that will likely limit future manufacturing growth potential. What do you think about that quote right there, Michael? Is that something that resonates with you about the prospects for the labour market in the near term?
So certainly there were some concerns when we had, getting back to the earlier question, when we had those $600 weekly bonus payments, that was hindering the return of the workforce. But with those behind us, we haven't been hearing as many anecdotes. So I agree that it was a little bit confusing, those comments and that reading. And generally, one thing I would say is it's been a little bit confusing how strong manufacturing employment has actually been over the past few years. And actually, we've seen manufacturing productivity go down, which is pretty odd because this is a sector where generally we expect high productivity. So I think over time we should come to expect slower manufacturing employment growth. I wouldn't, though, expect it all to happen in 1 month like the ISM might perhaps suggest.
Well, Michael, do you think it makes it difficult to get a read on payrolls this Friday, given what we heard yesterday?
Well, I think it was difficult even before yesterday. We were getting differing signals from a number of things we normally look at, and I think the consensus, the Bloomberg poll, was somewhere between minus 100 to plus 700 or 800, so quite a wide range there. Hopefully the ADP this morning is somewhat correct in saying that it's sort of in the middle of that range. But I think even before the ISM, calling this Friday's number has been a little trickier, certainly than normal years.
Michael, John Herman of MUFG has a great grid this morning showing his relative optimism, even though he's got a negative statistic on GDP. And then the Street and the IMF, OECD, and all the others as well. As a general statement this December, are we too gloomy?
I think it depends whether you're talking about the very near term or whether you're talking about the medium term. For the medium term, I would say prospects are looking pretty good, certainly given all the news on the vaccines, which all the viewers are aware of. If we get something like the bipartisan stimulus deal combined with the vaccines, I think we could be set up for a very strong 2021, particularly as we get into the spring months. But if you're talking about the very near term, I think we could be in for some pretty rough months, particularly December, January, given the surge in the virus, the presumptive surge following the Thanksgiving holiday, and what that could mean for activity, particularly in consumer services. So if you just have a very short-term view, I think there are certainly reasons for gloom. I think if you look beyond a few months, I'm quite optimistic on prospects for the U.S. economy.
So Tom is just trolling me at this point, saying, are we too gloomy, and then having you weigh in on it, Michael. I do wonder, though, when you talk about how it's going to be very difficult in the near term, we keep talking to people about the potential for scarring. And there's a question of how much people are adequately accounting for this in their models for the future beyond the next couple of months. Where are the pitfalls in terms of what people are pricing in? In other words, is there weakness that's going to be more persistent and have longer lasting scars than perhaps people are accounting for?
So I think this gets back to somewhat to Tom's question about potential GDP growth. So there certainly will be some scarring. I think the extent is, so far the indicators are looking, I would say, relative to expectations in say, March or April, when it comes to things like permanent unemployment, or people who consider themselves permanently unemployed as a share of the overall pool of unemployed individuals. That's actually not moved up as much as certainly I feared. We're still a little depressed on labor force participation. I think if we have strong growth next year, we can hope to bring those people back into the labor market. But I think there are reasons to say the jury's still out. But what I would say is, yes, there will be scarring. The degree might be less than, certainly than I had feared 6 or 7 months ago.
Michael, great to catch up. As always, Michael Ferroli there of JP Morgan. Looking ahead to Payrolls Friday. Payrolls Friday just around the corner, 486,000. That is your median estimate in our Bloomberg survey. The previous read, 638. Still decent numbers, Tom. Deceleration, though, maybe that's the takeaway over the last several months. But the wild churn, the idea that we're still getting claims up by 700,
exactly.
800,000 is just amazing.
If I've learned one thing, John, in a zillion years doing this, the pros love high-frequency data, like the Bloomberg Consumer Confidence Index. And I would suggest claims is very valuable here because it's out weekly. And there's just something about the weekly data. And, John, on radio, this really works. I'm taking my hands and squeezing them together. I mean,
on TV, it works, too.
It does work. It's good on TV. Claims have come right down with their moving averages, John, to a single point that you mentioned, roughly 700,000.
For our listeners on radio, it doesn't work on TV either, so don't worry about it. But, Tom, the story is that we're still close to 800,000, that the improvement of people hope to see towards year-end. It's not there in claims right now, and we've got some difficult weeks ahead of us.
We heard in interviews this morning where people are suggesting the vector may be a little bit of a lift to it as well. I'm not saying back to 1 million on claims, but nevertheless, there it is. And then you go on to Jobs Day. John, I'm just, because of the arduous sabbatical I was on, I'm just flat out not up to speed on Jobs Day. I have to read in.
You should read in. We'll start with the estimates. We've just done that. You get prepared. You've got a couple of days, Tom. Payrolls Friday, 2 days away.
Hi.
Jobless claims coming tomorrow. I missed you. I did. I actually did miss you. I did. I mean that, seriously. I missed you. We can have a moment.
For a radio audience,
me?
Tom is crying.
Tots, radio, help me here. Tots, 0-0. John, a draw is un-American. You don't play for a draw or a tie.
You're unhappy about that. You wait to see who they're going to play in the FA Cup in the next couple of months. You'll love that story. You have a little read and we can talk about it in a couple of minutes' time. Google
it's
Marine
un-American. You
Tottenham.
Don't play for a tie.
Do that.
It's almost as bad as what a penalty shot is. 0-0.
I know.
Celebrate.
Just have a little Google. We're talking past each other. I know we're good at that. Just have a little Google and we'll talk in a couple of minutes.
FA?
FA Cup, Tottenham. Who are they playing next?
FA Cup.
Have a look. You've got this. This is Bloomberg.
FA Cup.
With the First Word News, I'm Ritika Gupta. For the first time, a coronavirus vaccine will be available in a Western country. Regulators in the UK have approved the shot made by Pfizer and BioNTech. The government says 800,000 doses of the vaccine are ready for delivery from Belgium, and 50 hospitals are preparing to administer them. In the US, an FDA panel will meet next week to discuss the vaccine. President Trump reportedly has discussed whether to grant preemptive pardons to his children, his son-in-law, and to personal lawyer Rudolph Giuliani. According to the New York Times, The president has told people he's concerned that the Biden administration might target his 3 eldest children, son-in-law, and Giuliani. The White House isn't commenting. The Senate is expected to vote today to advance a nomination of Christopher Waller to the Federal Reserve Board. That's likely to lead to his confirmation later this week. Waller is research director at the St. Louis Fed, but Senate Majority Leader Mitch McConnell hasn't indicated he'll try to revive President Trump's other Fed nominee, Judy Shelton. Her nomination was blocked 2 weeks ago. And Walmart is investing to boost more subscriptions to its new membership program during the holidays. The world's largest retailer will remove the $35 minimum on online orders for Walmart Plus members to get free shipping. It's another shot fired at Amazon Prime service. Walmart has reported that online sales have boomed during the pandemic. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need is surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I've always thought about what the next chapter in my life might be. Post-Disney, because there will be a post-Disney soon. I'm not going to fail stepping down again. And giving back in some fashion, serving our country in some fashion is certainly something that I would consider seriously.
I'm not going to fear stepping down again. The words of Bob Iger, Walt Disney co-executive chairman. You can watch the full interview with Disney executive chairman Bob Iger on the David Rubenstein show tonight at 9 p.m. Eastern Time. From London and New York this morning, good morning. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. Coming up a little bit later this morning, we'll catch up with Mr. Dan Suzuki of RB Advisors a little bit later in the hour, in the next hour, with equity markets at all-time highs coming into Wednesday.
Dan Suzuki, always interesting. Really looking forward to that, particularly after the bullishness we saw from David Kostin of Goldman Sachs. Right now, I talked about this moments ago, we're going to get a primer. This is really important for global Wall Street, but particularly for all of us where the data is a blur. Michael McKee is expert at this. He's Bloomberg Economics and Policy and high-frequency correspondent. He joins us this morning because he is a high-frequency McKee. Michael, we treasure weekly data, don't we?
We do, and we have over the course of this pandemic. The problem is it's so hard to measure everything. We don't know what data is actually telling us what, other than in broad strokes. The high-frequency data telling us things have slowed down in the months of October and November as the pandemic has re-accelerated. But then you look at numbers like ISM that came out yesterday, not a whole lot of change. The market PMI actually for the month went up. And so you have to take any kind of forecasts with a grain of salt. One interesting thing that I wanted to point out to you guys, tomorrow, of course, we're going to be here at 8:30, talk about jobless claims. The Government Accountability Office found that after investigating, the jobless claims numbers aren't accurate. There's just too much duplication, too many fraudulent claims. And so they're going to start putting a warning label on the jobless claims numbers, telling you you can't take them at face value.
Well, this is important, folks, and I missed this somewhat because of my sabbatical here. But, Michael, brief us again on this. There's a real question about the countability of claims. Great. I don't know who's wrong, who's right. But what do they do going forward besides slap a label on it?
There isn't much more they can do. The Labor Department can only report what the states are reporting to them, and the states are really struggling with trying to get accurate counts, particularly in the continuing claims kinds of areas where they're adding up weekly numbers and you have duplication in many areas, and so therefore the numbers get skewed to the upside. So economists have generally started discounting claims, but they still get a lot of attention in the markets. So it's going to be something to pay attention to tomorrow when we get a sort of warning label on them. And that affects everything else, too. Tom, I know you love to talk about skew. If you look at the numbers, the forecasts for non-farm payrolls, the high estimate is 770,000 for Friday.
Wow.
The low is negative 100,000.
Wow.
Well,
so the range is enormous because people really don't have a good way to make a forecast right now.
Especially when you've got warning labels literally on the data that's coming out. So let's move past the headlines and look at some of the trends that you've done a really good job of highlighting, in particular the temporary layoffs from the permanent layoffs. What sense do we have so far of how that is shifting at this point?
Well, Mike Feroli was talking about this, and it's something that economists are watching. It's in the jobs report on Friday. The number of people who were on temporary layoff or who reported they were on temporary layoff was very, very high at the beginning of the pandemic, and that number has come down as people have gone back to work. We saw in the ADP figures today, whether you believe it or not, 95,000 people in leisure and hospitality went back to work in the month of October. And so it's hard to say that we're going to see a significant change in that. The question now is how many people are going back to work and finding that there's no job there because their companies closed down because they can't be viable without customers. That's the permanent job losers. And so that the relationship between the two, permanent job losers has been rising, temporary job losses has been falling, is something that people are watching closely.
The other thing that people are watching is wage pressures or lack thereof. What have we seen so far on that front?
No real wage pressures, and this is another example of the numbers being distorted by the huge amounts of people who have been laid off. Most of the people, not most of the people, but the majority in the category of laid off have been people at the lower end of the wage scales, the waiters and waitresses, retail clerks, people like that. And so those numbers drop out, and it looks like in the data that we're seeing wages go up, but that's not really what's happening. It's just a mathematical change because you're taking out the lower end, the denominator here. And so we don't really have a good read on wage pressures, but at this point, because there are so many job openings and losses, nobody really thinks that there is a wage problem out there.
Michael, I believe it was you who came up with the quote, "When the facts change, I change," in economics. And I look at an unemployment rate of 6.8, 6.9%. Where do the deficit hawk Republicans change their tune? Do you need the emotion of a double-digit unemployment rate to get them going, or is it a different statistic?
I'm not sure there is a particular statistic other than perhaps if we had a big drop on Wall Street or something like that. The numbers aren't going to probably change so drastically that it would influence the political calculation at this point. Washington is so fixated on my tribe versus your tribe that the good of the whole is hard to see them addressing. But if we do see some surprise that leads Wall Street to get concerned, then they might react.
Report overnight from our Kevin Cirilli, Michael McKee up for a pardon from the president off of his
question. For all my bad predictions.
For your question to Chairman Powell, 3 press conferences ago. Mike had a question, folks, back in the summer sometime. Lisa was on vacation, like 3 weeks, canoeing up in the Adirondacks. McKee asked a question, and there was just, as Powell tried to figure out how not to answer McKee's question. Michael McKee, always with his leadership in the press conference and, of course, working with us of all of Bloomberg economics. Lisa, I look at the data here, and I'm sorry, it's a resilient tape after a ginormous day yesterday.
Yeah, and basically what you're seeing is just a resetting as people try to factor in both the vaccines coming in and also, and this really can't be overstated, the increased chance of some sort of fiscal support package getting passed before year end.
I agree.
I do think that's a game changer. And I will say Terry Haynes of Pangea Policy came out and said that he's increasing his chances of something getting passed to 25% from 10%. Still not great, but still an increased chance, and that would make a serious difference for markets.
And it will be bragging rights into the new year from what we heard earlier, a pragmatic president-elect and perhaps an even more pragmatic Republican Senate and across to the House and their realities as well. Just so much here to talk about here. Futures negative 12, Dow futures negative 137. John has harped all day on FX, and it's important. I want to talk about the blended Pacific Rim currencies and the idea of ADXY, which is the currency pairs of the Pacific Rim. Ex-Japan, very important that Japan is not in there. So you get a real look there. And that index is really pushed out towards record highs. That's something really worth watching. And again, taking the headline today, the euro 120.72. We're moving around after the big move yesterday, but we'll note that. Euro yen, what the pros look at, 126.28 as well. Please stay with us through this morning on Bloomberg Radio and Bloomberg Television. Good morning.
Me indigna a forma que esses governantes dirigem esse país pensando só naqueles que já têm muito e já têm demais. E é mais uma vez por isso que a gente optou por ocupar esses espaços, para que a gente lá de dentro possa exercer a mesma pressão que a gente já exerce na rua de fora para dentro. A gente quer abalar essa estrutura.
Eu tenho muita esperança, tenho muita fé em Deus que aqui a gente ainda vamos conseguir a nossa moradia digna, a nossa casinha para, ao menos nos últimos dias de vida, se vender numa casa.
Never met, obviously, Walt Disney, but if you had a chance to talk to him, what would you want to ask?
Obviously, probably the number one question would be, how am I doing? You know?
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
From New York and London for our audience worldwide, good morning, good morning. This is the countdown to the open, and the countdown to the open begins right now. 30 minutes away from the opening bell with futures down 10 on the S&P. We pull back from all-time highs. We begin with the big issue. Pressure building in Washington, with infections continuing to rise, troubling numbers forcing state and local officials to issue new warnings, potentially increasing restrictions ahead of the holidays. This coming amid rising prospects for another stimulus package following testimony on Capitol Hill. Fed Chair Jay Powell urging lawmakers to provide additional support despite the recent vaccine developments.
Recent news on the vaccine front is very positive for the medium term. Nonetheless, we do have a long way to go. What they need is fiscal policy, is a grant to get them through this last bit of the pandemic, rather than borrowing more through a Federal Reserve facility.
Secretary Mnuchin calling on both sides of the aisle to come together and act appropriately.
I continue to believe that a targeted fiscal package is the most appropriate federal response. I strongly encourage Congress to use the $455 billion in unused funds from the CARES Act to pass an additional bill with bipartisan support.
Meanwhile, congressional efforts to pass fiscal support continuing, with Speaker Pelosi and Minority Leader Chuck Schumer presenting Republicans with a new proposal.
Speaker Pelosi and I sent yesterday a proposal to Leader McConnell in an effort to get things moving. I'm not going to get into the details. It was a private proposal to help us move the ball forward.
Meanwhile, Senate Majority Leader Mitch McConnell responding with a plan of his own, saying it had already received the president's backing.
I think the one thing we all agree on is that we don't have time for messaging games. We don't have time for lengthy negotiations. The issue is, do we want to get a result? And I like to remind everybody that the way you get a result is you have to have a presidential signature.
For more, let's bring in Michael McKee, Bloomberg International Economics and Policy Correspondent. The talk's back on the table. It feels very familiar, though, Mike.
It does, John, and forgive everyone for being cynical about the possibilities of success. Let's set up where we are by looking at the good news of the day, though, and that is coming from the UK, where you are, the UK approving the first vaccine, the Pfizer vaccine. They use a different methodology from the U.S., so it takes a little longer in the United States. But U.S. approval and European approval expected very shortly, which raises then the logistical question of who gets the vaccine and when. As you can see this rough timeline, people in long-term care and healthcare healthcare workers in the United States. This is the Center for Disease Control put together this idea yesterday. Then elderly people and people with underlying conditions, essential workers would be next on the list. And by June, they're saying just about everyone should have the opportunity to get a vaccination. Now, the problem is, how do you get to June in the economy? The way things are going right now, with things slowing down, with unemployment assistance expected to expire at the end of the year, then we need additional stimulus. As Jay Powell put it yesterday, a bridge until the vaccination. Big differences remain between the parties, though. Despite the optimistic comments you heard in those sound bites there, they're still far apart on things like aid to state and local governments. McConnell will give them nothing. Extended unemployment benefits, McConnell says 1 month. The bipartisan group says 3 months. There's no aid for transit agencies like the New York or Washington subways in the McConnell bill. McConnell does call for legal liability protections and a tax deduction for people who go to restaurants and bars. So a lot of wood needs to be chopped between now and when we might get some kind of a deal, John. Let me just quickly mention that there are also some new CDC guidelines on the what you're supposed to do if you are exposed to someone. Quarantine guidelines shorter. 7 days instead of 14 if you take a test and it's negative. 10 days if you're not tested. They think that because we're all going to be in this for a while, more people will comply with the quarantines if the time is shorter.
Compliance has been the issue. Michael McKee, I feel like we've seen this movie about 5 times since the end of July on these fiscal talks. Mike, thank you. Moving's Bob Dole expecting another round of fiscal support, but urging traders to remain prudent. Writes the following: investor sentiment is rising quickly and expectations are high, which could make markets vulnerable to near-term disappointments. We would urge caution towards stocks in the near term and advise against chasing returns. Bob joins us now for more. Bob, always enjoy catching up with you, sir. This just feels like mass capitulation over the last month. Is that what it is for you?
We're seeing some of that for sure, John. You're seeing the investor intelligence numbers, put-to-call ratios. All these are kind of in the top decile of observations, which usually means at some point you got to pull back. We're in a seasonally very strong period, so I don't want to overdo it, but I would not be chasing stocks here. I don't see big downside, but you're right. There's been some capitulation, and while we have some bright lights at the end of this tunnel regarding those vaccines, I don't think we get from here to there without a bump or two along the way.
You share the same view as most people, though, for 21, though, Bob. It's going to be a good year. Many people feel that way, so why get defensive now?
Well, again, I'm only being short-term in orientation. If you've got cash on the sidelines earmarked for equities, I wouldn't go plowing all in at all-time highs. I'd take my time about it. Look, light at the end of the tunnel, vaccines, economic reopening, improvement in earnings. We're probably going to be okay. And absent some, big downturn, but I don't think it's going to be a straight line. And we've had pretty much a straight line up since the election, as the absence of the blue wave has caused a lot of people to breathe a sigh of relief and put money to work.
But what is it about what you anticipate that's going to test the patience of this market right now? Is it the data? Is it policy? Is it the pandemic? Is it execution around the vaccine rollout? What are you anticipating?
Yes, all of that. Again, I don't want to fight the Fed and I don't want to fight the tape, but my comments are it's not a straight line. Look, just because we have a vaccine doesn't mean everybody's immunized tomorrow. We could see some mutations in this thing along the way. That would not be a pretty scene. I mentioned this kind of one-way street sentiment that bothers me. Nobody's talked about it for a while, but valuations aren't particularly cheap. Stocks are, up there in the 20s, and that matters, at least over the long term. Valuation matters. So earnings, we're into confession season before long. Third quarter earnings were a lot better than expected. Hopefully fourth quarter will be as well. But, this rush to raise my GDP numbers for the fourth quarter, I think it's going a little too far in the wake of some slowing in retail sales. The employment numbers are going to be good, but they're not going to be great. So please don't take me. I'm not a bear. Don't fight the Fed. Don't fight the tape. But it's not going to be a straight line.
Totally understand. I'm not going to call you a bear, Bob. I know you're not a bear. 2021, though, it's become very, very consensus. Can you walk me around parts of the market, pockets of the market where you're out of consensus. I'm just trying to make it a little bit interesting right now, Bob, because for me personally, I don't know about everyone else, very same over the last couple of weeks.
Yeah, so regarding the market, what I would say is, I'm going to try to thread the needle here. I think stocks will be up next year, but I'm not sure they'll be up as much as earnings. In other words, multiples, I think, come in a little bit, John, as interest rates slowly but surely continue to rise. Inside the market is where all the excitement is. As you know, I do believe September 2nd, intermediate high, was a shot across the bow. Pfizer Monday, where we get that multi-standard deviation development, was a secondary warning to say, don't have all your money in U.S. large-cap defensive growth stocks. I wouldn't sell them all, but I got to trim them and own some smaller, cyclical value, more international, emerging markets. That's a change that some people have glommed onto. Other people's are still, as you know, kind of cautious on that change.
Bob, always great to catch up with you, sir. As always, before you go, though, just one conviction trade around 2021. You don't get to leave just yet. What is the conviction trade for next year for you, Bob? Is it international then?
That whole stream of things. Cyclical means more small, more cyclical stocks, more value, and more international.
Bob Dole, always great to see you. You look well, Bob. Thank you.
Thank you, John.
In this market right now, we're down about 10, 11 points on the S&P 500, down a third of 1%. At a market desk with some movers, here's Abigail.
John, let's take a look at two of the big stock stories on the morning. And of course, I am talking about Pfizer and BioNTech, the fact that their COVID-19 vaccine has been approved by the UK for distribution. 800,000 shots will be available next week. So those shares are both popping higher. On the other hand, we have Salesforce.com and Slack lower as last week's rumor today becomes the news. Selling the news, Salesforce.com is buying Slack for $27.7 billion. That's a 55% premium. Into yesterday, that stock up about 50%, so almost there. And this is a continuation of CEO Mark Benioff's strategy to really add on to the company. He's done now more than 60 deals over the last 21 years, really becoming a big cloud computing king, taking on Microsoft. And, John, right now we have breaking news with Lyft. The stock is down just a little bit on the news. It looks like they've pre-announcing a little bit to the downside. They're revising their fourth quarter guidance. The revenue growth now seen at the lower end of the 11 to 15% growth range. They, of course, reported early last month. It was better than expected. Now they are guiding toward, again, the lower end of that growth range of 11 to 15%. That stock is down just a little bit here in the pre-market.
Abigail, thank you. Coming up on this program, President-elect Joe Biden looking to restore relations with transatlantic allies, signaling a united front against China. That conversation up next with Michael Schumacher of Wells Fargo. From London and New York this morning, good morning. 20 minutes away from the opening bell, set to pull back just a little bit from all-time highs on the S&P 500. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge x I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
The team I'm announcing today will play a critical role in shaping our plan for action starting on day one.
It's essential that we move with urgency.
This is a moment of urgency and opportunity.
To pull families back from the brink.
Deliver immediate economic relief to the American people.
Keep lifting Americans up.
Make our economic system work better for every American.
Thinking about you, your jobs, your paychecks, your struggles.
We're going to create a recovery for everybody, for all. We're going to get this economy moving again.
A recovery for everybody, acting with urgency. That was President-elect Joe Biden's team unveiling incoming members of his team and looking to get the economy back on track and tackling the contentious relationship with China. Biden telling the New York Times that he plans to enforce the existing Phase 1 tariffs, saying, quote, "I'm not going to make any immediate moves," and the same applies to the tariffs. "I'm not going to prejudice my options. The best strategy, I think, is one which gets every one of our allies on the same page." Bloomberg chief Washington correspondent Kevin Cirilli joins us now for more. So, Kevin, on day one, it's as you were. On day 2, 3, 4, 5, 6. Sounds like a future president that's sticking with it.
Precisely. And look, I think that just as important as Janet Yellen to lead the Treasury Department as it relates to U.S. and China relations is going to be the team that she puts together, that she works with President-elect Joe Biden on, particularly as it pertains to geopolitics. And look no further than Wally Adeyemo, who, of course, is the current head of the Obama Foundation and a staunch ally to former President Barack Obama, and who has deep ties to the business community of all sizes, not just big business, but also small business. And I mention this because really what you're noticing from that New York Times interview is an opening bid of sorts in terms of how this administration, along with likely Secretary of State Tony Blinken, is going to do geopolitics with China. This is not the notion that this is going to be exactly a third term of the Obama administration is completely divorced from the current geopolitics reality, because the world that the Biden administration is stepping into as it relates to tariffs, as it relates to trade, is very different than it was 4 years ago. I mention this as we look forward to the confirmation hearings in a couple of months. I spoke with several sources close to the likely Treasury Secretary's team, as well as members of Congress over the last week, and all of them suggest that former Fed Chairwoman Janet Yellen will not face a significant hurdle in getting confirmed through the Senate, even though the math in the Senate significantly helps Republicans at this point.
That's why I think this pocket of policy around trade is so important, regardless of what happens with the Senate. This is where they can actually get something done, and we've hardly paid any attention to it over the last month. I want to leave you with this line from Leader McConnell, Kevin, and we can talk about it just briefly. After the first of the year, there is likely to be a discussion about some additional package of some size next year, depending on what the new administration wants to pursue. A recognition from Leader McConnell of who the next administration is going to be after January 20th, point one. And point two, the idea, Kevin, that whatever happens in the next month, there's a follow-up, a sequel in the months after. Is that something that's actually resonating with DC? Because I'm telling you, from the conversations I've had, most people assume that whatever happens in the next month, that's it.
Yes, and I'll keep this very quick. Two things. First and foremost, yes, Washington is aligned with the investor perception that another stimulus fight will happen after January 20th when the president-elect is sworn in. And then secondly, in terms of geopolitics, because of the domestic divided government front, the Biden administration actually has an opportunity to really put foreign policy front and center, which typically happens at the end of someone's term. But in this case, it's happening in reverse, a remarkable reversal from previous historical norms.
Kevin, great to catch up. As always, Kevin Cirilli down in D.C. Thank you, sir. Will we even have a divided government? Mike Schumacher of Wells Fargo warning that markets are underpricing uncertainty. in the Senate, with Predict giving Democrats a 28% chance of sweeping. Schumacher says the following: the initial reaction will be risk-off for a few days, with the S&P dropping a few percentage points and 10-year yields falling 5 to 10 basis points. But longer term, he sees yields rising due to supply concerns. Mike, let's start there, just with the premise of the analysis. You think there's a real underpricing of what could happen come January 5th. Why, Mike?
Yeah, you got to remember, John, that Jan 4 is the first trading day of the year, so the Georgia elections are the next day. There's a lot of, I would say, pent-up need or interest in moving positions around early in the year anyway. And now on top of that, you've got this wildly unusual event. So it seems to us it's really a perfect recipe for a lot of vol early in January.
The second premise is that supply matters to the long end of the bond market. Mike, do you think it does?
We do. Look at the action over the last couple of days. Treasury yields are up, partly because of supply expectations. I think also because simply the calendar turned and we're in December now and all the month-end extension went away. But nonetheless, the market is still reacting to supply issues. Now, whether the potential fiscal package is $500 billion or $1 trillion makes a lot of difference, but the market still cares, John.
Well, let's talk about the Treasury market. The last 24 hours, phenomenal move, up 8-9 basis points on a US 10-year after immense stability over the previous 3 weeks or so. 10-year right now, 0.94%, up another basis point or so on a session. Mike, are you putting that down to fiscal talks then, right now? Because a lot of people trying to dissect what happened in the market yesterday. Was it the data? Was it the talks? Was it positioning? Do you think it was just one of them? It's about supply, it's about fiscal talks.
It's really a mix in our view, John. So you had a few things going on at month end, which I know are sort of technical, but the various fixed income indexes extended quite a bit in duration. That really compelled managers to add duration, which normally depresses yields on the last couple trading days of the month. Secondly, pensions, we think, had to add a lot of bonds after the monumental performance by equities over the last month. That, too, would put pressure downward on yields. You take those two factors out of the equation, and on top of that, throw in speculation about additional spending, and boom, yields are up 8-9 basis points on the back end. So how much is stimulus? 3-4 basis points, in our opinion. Probably not too much more than that.
Well, a lot of people seem to think we can't go too much higher from here, Mike. Reason being, one, is that they think the Fed in the next couple of weeks is going to step in, extend the average maturity of its asset purchase program and put a lid on things, not allow the curve to steepen, not allow yields to creep higher. You don't share the view that the Fed makes a move, or at least a sizable, significant one, in the next couple of weeks. Why, Mike?
Couple reasons. Number one, the curve has been about as contained as it possibly could be. Think back to mid-March when equities bottomed. The 10-year Treasury was 79 basis points. Now it's, 15 basis points higher? Frankly, who cares? That's a non-event in the context of a 50% plus rally in stocks. Secondly, consider the timing of the FOMC meeting, December 16th. The Fed will know 3 weeks after that, plus or minus, who's going to control the Senate, and therefore will have a much better read on fiscal policy going forward. Why not wait a few weeks, get a better sense of the political landscape, and then move? And one final point, if you look at the minutes from the last meeting, they really offered no hint the Fed was really inclined to extend maturity or increase its bond purchases very soon. So I'd say the odds are tilted against the Fed moving in a couple weeks.
There was a subtle hint around providing a little bit more clarity on the reaction function around the asset purchase program. They have done so much to explain away what they won't do with rates if things get better. Do you think they need to do the same on the asset purchase program, and do you anticipate they will this month?
I think it would help to provide a bit more clarity. Now, what the Fed did indicate in the minutes, though, John, is it will not provide a very specific reaction function. So it won't say something along the lines of, if unemployment goes to 6%, we'll cut bond purchases to X billion per month. That's what the market would love to see. That seems really unrealistic. But perhaps a bit more of a guideline from the Fed would be pretty helpful, and I think the Fed could deliver that.
If it's not state contingent guidance, Mike, what will it be?
Oh, probably something along the lines of, if conditions worsen, we're inclined to pick up our purchases. We're not constrained. There's no upper limit. That sort of talk. Every central bank wants to convey the impression to the market that it still has plenty of tools, plenty of room to move. And yes, the Fed could buy a lot more bonds, but it's not going to give, I would say, a very specific schedule in terms of how QE maps onto various economic data.
Mike, always great to catch up, sir. Good to hear from you. Mike Schumacher of Wells. And what he does not anticipate the Federal Reserve doing later this month. Coming up on this program, the analyst action you need to know. That'll be next in our morning calls. Then later, around the opening bell with stocks at record highs. The word euphoria starting to appear in Wall Street research. A big warning coming from Citigroup. We'll bring you that research and get you the conversation with Dan Suzuki of RB Advisors. In the markets right now, 7-8 minutes away from the cash open, equities pulling back from record highs on the S&P 500. We are down by 0.4%. On the Nasdaq, record highs as well. We are down by 0.6%. For our audience worldwide, the cash open just around the corner in New York. This is Bloomberg.
हमारा सर्वाइवल सिर्फ और सिर्फ इस इलाके में ड्रिप इरिगेशन सिस्टम की वजह से है और इससे हमारा मुस्तकबिल भी और इससे हम फ़ायदा भी ले रहे हैं।
तकरीबन 20,000 स्क्वायर किलोमीटर लैंड जो है वो अबंडेंट पड़ी है, जिस पे कुछ भी एग्रीकल्चर टेक्निकल तरीके से नहीं हो रही।
The opening bell 5 minutes away with equity futures down 13 on the S&P 500. We're negative 0.36%. Let's get you some morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin with MoffettNathanson upgrading Verizon to a buy, a $66 price target. The analyst citing the stock's valuation, writing that it's simply too cheap to ignore. That stock positive by 1.5%. The second call from Deutsche Bank upgrading Coles to a buy with a street high $49 price target. The analyst expecting consistent revenue growth following the retailer's new partnership with Sephora. We advanced 0.6% there. And your third and final call, it comes from BMO downgrading Hasbro to market perform with a $90 price target. The analyst seeing limited room for additional upside following the stock's massive rally off its March lows. We are negative there by 1.39%. That's three of the calls on the street coming up. The M&A momentum continuing and Wall Street starting to flag signs of euphoria. That conversation up next with Dan Suzuki of RB Advisors. The opening bell just around the corner this Wednesday morning. Good morning. This is Bloomberg.
pandemic swells the gap between the rich and poor around the world, there may be no starker case of inequality than Venezuela, where the socialist leader Nicolás Maduro has kept his hold on power by fostering a Darwinian dollarization under quarantine. The nation's mighty oil industry has collapsed. Water, electricity, and gasoline are barely available, and hunger hunts vast portions of the population. 4 out of 5 Venezuelans can't afford a basic food basket last year, according to a research by the main universities. Meanwhile, Caracas neighborhoods have a dozen new delivery services bringing to their doors everything from truffle salmon poke bowls to electronic cigarettes and $50 gluten-free birthday cakes.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Record high after a record month for small caps, a record high on the Nasdaq, a record high on the S&P. We pulled back just a little bit. We're down 12 on the S&P 500, down a third of 1%. On Nasdaq futures, down 62. We're negative 0.5% of 1%. That's the story of the equity market. For me, I just found the bond market much more interesting yesterday. Maybe that's just my personal bias. Switch up the board in the bond market. Treasury yields were higher by 8-9 basis points on a 10-year to 0.93 we go, up on almost another basis point on the session so far. Is it about the data, positioning, fiscal talks? You find me 3 strategists, they'll get them to say 3 different things at the moment. Most of them agree, though, all of the above. In the FX market, euro-dollar 120.71. Earlier in the session, a new high for 2020 of about 120.80, there and thereabouts. In the commodity market, crude unchanged, $44 and about 60 cents. That's your cross-asset story then at the market desk this Wednesday with your movers. Here's Abigail.
John, let's start out with some of the COVID-19 movers because we do have the shares of both Pfizer and BioNTech popping sharply higher. This, of course, on the news that the UK has approved their jointly developed vaccine and that it will be available for distribution next week, 800,000 shots. On the other hand, we have Moderna down 1.27%. And this, even as CNN is saying that the U.S. may be able to have their vaccine by December 22nd. We, of course, don't know that, but that is what CNN was reporting. But that stock is down. As for Lyft and Uber, a little bit of weakness here earlier this hour. Lyft did come out saying that they're expecting sequential revenue growth to be in the lower end of the 11 to 15% range, and that ride sharing was down 50% in the month of November. They're really seeing a negative impact from the resurgence in the virus. Uber down on this news as well. Sticking with vehicles, John, finally, Tesla, which has been such a mover to the upside, taking a little bit of a breather, down about 3.7% here right on the open. This, of course, after a greater than 40% rally on the news that they will be included in the S&P 500, a 600% rally on the year, taking some of the other electric vehicle car makers, vehicle makers, and battery makers down. And in particular, Workhorse, the battery vehicle and Air Force company, that one is really plunging on a delay of a potential U.S. postal contract, John.
Abigail, thank you. 2 minutes into the session, we pulled back by a third of 1% on the S&P 500. Muted moves to the downside through most sectors, with the exception healthcare positive by about a third of 1%. That's the day so far. Let's get to the year ahead, 2021. I think the people on the sell side and the buy side do tremendous work, and I enjoy reading all of that research. It's just every time I read an outlook right now, it feels very familiar. 2021, yields will be higher. 10-year yields will go towards 120, 140, 150, but it won't disrupt the rally. Small caps over large, international over the US perhaps, value over growth, cyclicals over defensives. It all sounds very familiar, doesn't it? But in the last 24 hours, I have to say, just a little bit of pushback starting to creep in. This is what Alpha Omega's Peter Cicchini had to say to us.
Single name call buying has actually helped to keep volatility on the VIX elevated, for example. And that to me indicates more than anything else, frankly, speculative activity that investors or market participants are renting rather than wanting to own the market at these levels.
Citigroup's Tobias Lefkovich warning of frothy markets feeding off of euphoria, writing the following. Our sense is that the idea of no alternatives to buying broad-based equities has led to an overshoot. Current euphoric readings signal a 100% probability of losing money in the coming 12 months if we study historical patterns. Indeed, we saw such levels back in early September, right before a sell-off in equities. For more, I want to bring in Bloomberg's Kaylee Lyons. Hey, Kaylee.
Hey, John. Well, of course, we are coming off that record-setting November and December, starting out with a bang with fresh records for the S&P and the Nasdaq. But we are just a touch softer this morning, and that's starting to raise questions about how long the rally can last. You were just citing Tobias Lefkovich over at Citi, and the last time his euphoria gauge was at these levels was right before a 9% sell-off in stocks. That was back in August-September period. And you're also starting to get echoes of late summer when you look at options, bullish call options in particular, showing a speculative frenzy. On average, over the past 20 days, more than 20 million call contracts trading each day across U.S. exchanges. That is the highest ever. And retail active in this once again, John. According to Sundial Research, small investors did about half their volume buying bullish calls in the last week. Now, basically, John, fear is relatively low. The VIX and VXN, the equity volatility gauges for the S&P and the Nasdaq 100, are well off their most recent peaks. The VIX crossing below that 20 handle for the first time since February last week. But what's notable is that both the VIX and VXN rose yesterday in tandem with equities. Actually, for the VXN and Nasdaq 100, the third day in a row they have risen at the same time. That could be a foreboding sign. And of course, while investors may be feeling a bit optimistic, we have to note that sentiment on the part of consumers is holding in there as well. If you look at the Bloomberg Weekly Consumer Comfort Index, that has held relatively steady, even in the face of resurgent virus cases. It just goes to show how many people are willing to ignore bad news in the near term with a vaccine on the horizon, John.
Seemingly, people willing to ignore a lot right now. Kaylee, thank you. Dan Suzuki of RB Advisors turning the page on the pandemic, seeing a 2021 rebound led by lockdown laggards, running the following. We're setting the stage for a significant growth rebound next year, and we want to own the beneficiaries. Growth is probably not going to be driven by the big tech stocks. It's probably going to be driven by the recovery in the depressed earnings from small caps, industrials, materials, energy and value. And this is what we want to own in the portfolios. Dan joins us right now for more. Dan, always appreciate your insights. Walk me through why, even when you have a big consensus, it doesn't necessarily mean that the crowd has to be wrong 12 months out, Dan.
Yeah, well, I think, hey, Jonathan, I think the main thing is to look at what people actually hold in their portfolios. So while you're hearing a lot of this talk about owning small caps and value and international, no one's really actually doing it. Just look at the flows. They're clearly still sitting in the winners of the past decade, whether it's large caps, whether it's tech, whether it's U.S. So, they're incrementally, maybe some of those dollars are moving outside the U.S. or moving towards small U.S., small caps and whatnot in international, but it's not, people really aren't putting their money where their mouth is. So we're saying put your money where your mouth is, own the stuff that's going to, drive that recovery next year. And that's what we've been doing in our portfolios.
Is Europe part of that story, Dan? Is the continent, the Eurozone, part of that story?
It is a bit of that story. I think it's pretty broad. I mean, the story is a lot about sort of avoiding some of the risks that are specific to the U.S. just as much as it's about owning, the improving areas of the world. But I think Europe is a part of that story. Europe, if you look at, we always focus on profits, liquidity, and sentiment. If you look at profits for Europe, clearly they're struggling and they're facing some of the immediate risks for COVID. But a lot of those COVID statistics are actually not getting worse today, whereas in the U.S., they're still rising. You look at liquidity, there's still, both in the U.S. and Europe, there's still a tremendous amount of liquidity support with probably people should err on the side of assuming there's probably going to be more support. And then sentiment is probably the big swing factor, right? If you look at sentiment, you were just talking about potential signs of euphoria in the U.S. It's hard to argue that you're seeing anything like that anywhere else in the world besides the U.S., particularly as it pertains to Europe. So I think there's just more upside on that recovery story.
Well, Dan, let's talk to what's happening in America then. I've spoken to a lot of people that are constructive 21, but quite cautious going into year-end 20. Are you defensive somewhat in the near term? And how would you express that defensiveness, Dan? What's the optimal way of doing so?
Well, if you think about what we've been doing in our portfolios this year is, roughly since April, we've been adding back cyclicality to the portfolios to sort of, again, buy the things that we think are going to drive this recovery in earnings growth over the next couple of years. But, do we want to jettison all of our defense in the portfolio? I don't think that makes sense, especially with this overhang of COVID, and especially as the overhang gets worse here in the U.S. So I think that, if you look at our portfolio, it's very much a barbell. We own a lot of cyclical, all the stuff that you talked about, that's going to drive this earnings recovery. But, we still have overweights in healthcare. We still have overweights in staples, and we still hold, a good amount of gold. And even China can be considered defensive in this weird year of 2020.
Well, it's where you find those uncorrelated pockets of the market. So, Dan, let's just talk about gold just quickly. Whether gold offers you that uncorrelated diversity and whether it's dependent on where the leadership is in the equity market. Dan, do you think it does?
I think that there's three main drivers of gold. It's interest rates, it's inflation, and sentiment. And so the big surprise for a lot of investors this year is the sentiment has been the big swing factor. So while, inflation trends have been rising, interest rates have generally been supportive, gold has actually been underperforming recently because of that sentiment factor coming from this period earlier this year where everybody was piling into the asset class. I think now that you've seen some of this underperformance, a lot of that, positivity has come out of the stock. So actually it's setting up for some pretty supportive drivers for gold. So I do think that it is uncorrelated to a lot of other assets because of, the impact of inflation and the impact of rates. But you got to keep an eye on what those sentiment drivers are doing as well.
Dan Suzuki, always so cool, calm and collected. At the lows in March, at the highs in December as well. Dan, it's great to catch up. Appreciate your work. Thank you, sir. Let's get you back to some of the stories with Abigail, shall we? Hey, Abigail.
Hi there, John. Well, one of the big stock stories on the day is Salesforce.com buying Slack. And of course, there was the rumor, the speculation that this would happen last week. At that point, Slack had soared up about 50% from prior to that rumor. Today, we have a little bit of sell the news. But interestingly, we have more selling of, not surprisingly, Salesforce.com, the acquirer. $27.7 billion is the price tag, cash and stock. And relative to the strategy here, buying is very much a strategy, a piece of CEO Mark Benioff's strategy, really acquiring companies. Slack is just one of 60 over the last 21 years, really making this one of the cloud computing kings out there and giving the company the ability to compete with Microsoft even more. It's working, though, this strategy, because their sales growth, very impressive, doubling over the last several years, and over the last many years, greater than 20% year-over-year sales growth each year. Might not be organic, but big numbers. And then finally, putting the Slack acquisition into the context of other deals this year, it's one of the biggest. The biggest right now is just from the other day, S&P Global buying IHS Markit for nearly $44 billion, but there's Salesforce buying Slack in the number 5 position. So in this very big year of uncertainty, John, lots of deals happening. Pretty interesting.
We've had some big deals despite what's happened, or maybe because of what's happened as well. We can talk about that another time. Coming up on the programme, what is going on in the labour market? Jobless claims, soft. Then jobless claims, softer. Again, then the RSM, otherwise robust, but the employment component, soft once more. The ADP report this morning, a downside surprise. Payrolls is coming up. We'll have that conversation up next on this programme with John Hancock's Matt Mishkin. This is Bloomberg.
for retirement is confusing. That's one reason why 42% of people age 18 to 29 have no savings, and partially because of things like student loans and other priorities like just being able to pay rent. But if you do have the means to save it all, here are some ways to get started. First, there's the one everyone thinks about, which is your 401k. This is a savings account that lowers your taxable income because you don't have to pay taxes on the money you contribute. The downside is that when you take that money out, you have to pay taxes based on the income bracket you're in at retirement age. But there's one major benefit to your 401k. Employers often offer contribution matching, which means essentially you're getting free money. Another option is the Roth IRA. With this, you pay taxes now on the money you put in. This gives you a savings account you can withdraw money from at retirement without having to pay taxes on the money you take out. You can only put $6,000 a year into a Roth. This is also a great option because with a traditional 401k, you may have to pay a penalty if you have to cash that money out early, but that's not the case with a Roth. Most financial experts suggest a combination of the two if you're able. To save more and worry less, you can set up automatic transfers into a savings account from your regular bank or credit union. Tools like Betterment can also help you set up automatic payments into a Roth IRA so that investing can be simple and mindless.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
We're going to have a bit of a dead spot here, as we go into the first quarter, and the economy does need fiscal stimulus. I mean, local governments need help, the small business need help, unemployed need help, as the benefits keep diminishing. So it's very important they get a deal done. We do think they will. We think that's probably the only serious legislation we get in the next 2 years.
The only serious legislation we'll get in the next 2 years. Bank of America's Ethan Harris expecting the economy to continue its soft patch, stressing the need for another round of fiscal support. A big week of economic data highlighting an uneven recovery, with manufacturing and unemployment numbers losing a little bit of momentum ahead of Friday's payrolls report. For more on that, the nuances in the data, it's Mike McKee. Hey, Mike.
Good morning, John. Yeah, we got some new employment numbers this morning from ADP, and they come in weaker than forecast. Private sector employment increasing by 307,000 from October to November, led by medium-sized and small companies. Service industries added 276,000 of those, including 95,000 in leisure and hospitality. Now, it is lower than the forecast of 440,000, but you have to ask, can anybody really forecast, given the way the numbers have come out over the past couple of months and the prevalence of the virus? The big number of the week, of course, jobs on Friday, and the spread there is enormous. Negative 100,000 to 770,000 gained. Puts the consensus at 486,000, which is going to be a slowdown from the prior couple of months. Private payrolls is one I want to highlight because that compares to ADP, and they've been much stronger. Notice the 638 in October for overall jobs, but 906,000 for private payrolls. The real weakness has been in government hiring. We'll see if that continues. The forecast is private hiring going to slow down. You mentioned manufacturing, ISM contracting in hiring in its manufacturing index yesterday. Manufacturing payrolls, though, forecast to go up, and unemployment to fall a little bit. The other number that everybody's been watching, of course, has been jobless claims, forecast for 770,000, little changed from the prior week. That comes out tomorrow. But this is important, and I wanted to get this mentioned. Tomorrow's report's going to come out with a disclaimer warning that the numbers may not be accurate. The Government Accountability Office investigated, and they said the number of claims has not been an accurate estimate of the number of individuals claiming benefits during the pandemic because of backlogs in processing a historic volume of claims, among other data issues. So we can't really use the claims numbers to forecast much either. It's getting harder and harder for economists to do their jobs. We just know that the trend has been a bit slower, as Ethan Harris mentioned a moment ago. But we don't have good, hard, solid data to base it on, John.
Michael McKee, in many ways that was helpful, and then in one way it really wasn't at the end there. Mike, thank you so much, sir, as always. John Hancock's Matt Miskin expecting pent-up demand to offer little economic upside, writing the following. It's hard to get much better than this. US ISM new orders readings in the top decile in history. Financial conditions as loose as ever, and China PMI the highest in a decade. This economic data looks more like a late cycle environment than early cycle and leaves little room for upside. Matt joins us now over the phone. Matt, great to catch up, sir. What brings the bears out of hibernation? Do you think it is the data?
Yeah, thanks for having me, Jonathan. You know, I think this jobs report on Friday could be a first start. And, you know, I remember hearing Jerome Powell say in 2018, it's almost like walking through a dark room and trying to feel your way out. And that was when, you know, we had kind of an issue in 2018. But the jobs data is so hard to get a sense of, and Michael McKee just talked about that. But if you do see weakening in the jobs data and you see a more a pronounced economic contraction materializing here in the next several months, I think that puts weaker footing on that 2021 improvement narrative. And I think that could weigh on yields. I think it could put some more pressure on equities and shake out some of that positive sentiment.
Vaccinations in the UK could start as soon as next week, Matt. Does anyone really want to de-risk as that begins, or is that exactly why you want to?
You know, there's a lot of positive sentiment around the vaccine news. And look, it's been a medical breakthrough, no doubt about it. And the market is telling you that this is a game changer. But this is unprecedented times. It's not like we have a playbook around a vaccine and how that's going to be distributed and how the markets and the economy are going to be influenced by that. Right now, the global economy is seeing winners and losers, massive divergence. I don't think it's going to be an easy as, you know, a light switch around a vaccine and we're all back to normal. It's probably going to be more drawn out. It's going to take time. And you want to be thoughtful around risk management because sentiment is so positive around it already that it leaves downside risk to that outcome.
Let's talk about how you're set up. Matt, you like the 60-40 portfolio. Other people don't. You like the US over the rest of the world. I know plenty of people that like the opposite. Matt, you're sticking with it. Why?
I mean, really, it comes down to the stability of earnings and trying to find visibility here the best you can. And when we look at earnings growth and earnings revisions, we see the U.S. and China, for the most part, driving the global bus of growth. And really, everyone else is you know, tailing off that or drafting off that. We think that actually continues into next year. And it's a lot of the same high-quality businesses in technology, communication services, healthcare that are likely to drive earnings results next year. You know, I think there is a catch-up potential. We like mid-caps. We like industrials for those ideas. But it's more leaning to the other parts of that market that has more visibility in earnings. And we think that's the safety and support in a time when sentiment is so positive that you want to gravitate towards.
Matt, I have to say, I have no idea if you'll be right or not, but it was refreshing to hear something different. Thank you. Matt Miskin there with John Hancock. In this market, we pulled back a little bit from record highs for some of the sector price action. Here's Abigail.
John, we do have a modestly risk-off tone here with the relatively moderate decline for the S&P 500, as you're mentioning, pulling back from the record highs. If we go into the Bloomberg and use the IMAP in the terminal, we will see most sectors are lower, so that is risk-off. Now, to the upside, the three sectors that are higher right now, two of them are cyclicals, energy and financials. Financials still benefiting from the big backup in yield, although that could be pressuring stocks overall. On the downside, you have tech and some of the other stay-at-home. Tech, though, being dragged down largely by Salesforce.com and the acquisition, so idiosyncratic. As for the quarter, though, John, right now, it is a banner quarter. All 11 sectors are higher, and coming into this December, take a look at the gains for the cyclical sectors, energy, financials, industrials, and materials. Those bulls are out. Can they hang on for the rest of the month? We'll have to watch and see, John.
Abigail, thank you. Coming up on this program, the market moving events you need to be watching. That'll be next in our trading diary. In the markets right now, 23 minutes into the session, here's your pullback from record highs on the S&P and the Nasdaq. We're down about 0.2%. This is Bloomberg.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
Five minutes in, equities are softer, but take a look at the bond market when you get a chance. We start to break out again, up 2 basis points on a 10-year, up 3 on 30s. Curve steeper, yields higher. Once again, on what? Not a lot. It's interesting. Keep an eye on that. Maybe a little bit more than what's happening in the equity market at the moment. That's the story in the bond market and in stocks. At the top of the hour, day 2 of Fed Chair Jay Powell and Treasury Secretary Steve Mnuchin testifying on Capitol Hill, this time in front of the House. The Fed's beige book coming at 2 p.m. Eastern, a little bit later today. President-elect Joe Biden holding a virtual roundtable with small businesses and the owners later this afternoon. And we get another round of jobless claims tomorrow morning. Then, on Friday, it's the main event. It is Payrolls Friday, just around the corner, the Payrolls Report. From London and New York this morning, good morning. For our audience worldwide, this was the countdown to the open. Catch me on Twitter at FerroTV. This is Bloomberg.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. It may or may not have power, but basic services are in place. They're able to get food, they're able to buy things, they're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look into him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all of this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of in life happens. You know, I'm here by myself.
So ¿dónde vive acá? En la parte de
This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay. In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became became something that's on t-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you,
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and he was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for
Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends. But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start. And from that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world, yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. he applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to us say, 24 people went for the job. 23 people were accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word, beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统建设，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你们长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma's an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker, and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different?
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, Value-Ag, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in it. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube and we evacuate that out. We introduce the gas into it and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, it is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
It's a bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Sven Cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect the pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice, you've got to be able to judge material temperatures, you've got to just look at it and you just get a feel for it. It's the stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives, so we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom, so as soon as I had one I was off. A lot of people still get that thrill as when they were a kid, blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. Take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours, start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table, once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, it's time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blue能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同志互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of like predominantly Asian artists, you know, really like making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but like for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I like, you know, I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. Like, to be honest, I would even go to the bathroom here. I would like take pisses here, you know what I mean? Like, it was, you know, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and like just the shit that he was saying, like the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with that stick like 2 weeks later.
12 in the morning, pop shells for a living and berry gon' smell blood trail every minute road.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just like everything about it, man. Just like, it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets like super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I just did sound check.
How was it?
It was tight.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. You know, and it's just more entertaining. We just edited it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on and a Reebok pouch.
This is the hardest nigga of all time.
You said when you come for a trigger like me. That was dope.
Like, it's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, it's like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chiga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
It's just Taco Bell. What could possibly go wrong?
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chiga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. I was the third person online.
So why'd you get here so early?
Because I want to see Rich Chiga. I want to touch him.
What do you guys think of Joji?
Oh my God!
That's my dad, son.
You guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But Idiot Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for Idiot's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store with customers, touch and feel products? And we created a concept called the Connected Rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said it feels like I've been released from prison. Do you want these, Mrs?
Definitely.
Definitely. Right. Yeah. And she could say hello to everybody, people she hadn't seen for months.
It's
Jade. It's Jade.
Oh. So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya. When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. have a condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time. A lot of the time with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand. Are you ready? Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in a house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do.
Was that? Good.
It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably.
He's written it out bigger on the board. Thank you.
Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well, and I was really tired afterwards and ended up having loads of seizures, whereas today I've been able to do all of the work. I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I could stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Myron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうと、どの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不開心的一些新聞。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとは、キャラクターとしてすごく、YouTube とかで検索すると、たくさんの初音ミクが出てくるんですけども、元々の、初音ミクのその原点は歌声を合成する、ソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていうその、存在自体がそのボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでに、プロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいになってきて、ライブも数十本、数百本だったと。そういうことが演奏によって起こせるための、そういう器みたいな感じになってきて。初音ミクらしさって僕はあんまりない。逆に初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいそのテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010. Then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit.
And action!
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What if everyone is a girl, superwoman? I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like,
Canada.
Is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And we're pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's a girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She started a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rusovsky is the CEO.
It's like a high-powered microscope, and so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rusovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime. You know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did. Because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along. You know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner, and they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas_a_chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. The company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got as sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire. And I think as a company, we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, you know, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in
means
means
to a layman like
feathering
me?
crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no, and we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
listen, I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week he said that Uber should focus on repairing its market share in the US and on key European markets rather than going going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is a
you
brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for
everyone.
everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board.
Was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved, but it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and you know, it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes, yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
Is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Yes, indeed. Live from our Bloomberg Interactive Brokers studio, streaming on YouTube. It is Wednesday. It's a Fed Wednesday, December 2nd, 2020. Carol Masser, along with Tim Stenovic, host of Bloomberg Quick Take, and we are focusing on these Fed Beige Book headlines, which is really cool because it's anecdotal evidence about what's going on in the economy. Kind of takes maybe a few minutes to kind of get through the Bloomberg, and we'll break them down. But it gives us an idea of what those regional Fed banks, Tim, are saying about what's going on, what they're hearing from businessmen, what they're hearing from people overall.
Yeah, anecdotal is always good, of course. It backs up data.
Yep.
And we've been getting a ton of data. We understand consumer sentiment, but we want to hear more about how people are feeling.
Right, and we're going to find out, too, how small business is feeling. We've got a guest later on coming up about that. So we'll break those Fed headlines for you in just a moment. First up, though, let's get a check on that trading day. Lots going on, Charlie.
Indeed, little change right now for the S&P, Carol and Tim. We've got the Dow Jones Industrial Average down 0.2%, S&P down less than 0.1%, retreating from a record. Nasdaq down 0.3%. But bottom line here, stocks are lingering near records as a jump in crude oil prices pushes shares of energy companies higher. We've got the price of crude, West Texas Intermediate up 1.9%, $45.39 a barrel. Gold up 0.8%, $18.29 the ounce. Look at the 10-year, 0.94% right now. And after earnings, Salesforce.com down down 8.8%. The big story with Salesforce, of course, so it is buying Slack Technologies for $27 billion. Many investors see that number as being expensive. Again, Salesforce down 8.8%. Slack lower now by 2.5%. I'm Charlie Pellet. That is the Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Master, Tim Stanovic in our Tim, did I say Ted?
No, you said Tim.
I told you. I warned you. It's going to be a bit of a crazy day. Let's hit the Bloomberg Business Week agenda because we do want to break down the Fed Beige Book and get an idea of what we heard from those regional Fed banks. Let's bring in our team. Joining us right now is, of course, Michael McKee, International Economics and Policy Correspondent at Bloomberg News on the phone from New York City. Also, Dave Wilson, Stocks Editor at Bloomberg News on the remote access from New Jersey. He is keeping an eye on the equity trade. Of course, this portion of Bloomberg Business Week brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. So let's learn more about these Fed latest we're hearing from the Fed regional banks. Michael McKee, what do we need to know?
Well, basically, the anecdotal reports are keeping pace with the story that's being told, put it that way, by economists and Fed officials that the economy has slowed. The latest Beige Book shows economic activity continuing to increase across all districts, but the pace of growth characterized as just slight to modest. It varies by sector. Manufacturing increased at a moderate pace, they say. They love those M words. And there's still steady demand for new and existing homes, but banks are worried about defaults rising. There's a leveling off of retail sales, consumer spending growth starting to drop off a little bit. And there are concerns among restaurateurs, of course, that cold weather will slow sales. Employment increasing in almost all districts, but they say growth is slow. And there is a tighter labor market than people think because workers have health and child care concerns, so some have to stay home.
Yeah, I know a lot of people who are wrestling with that right now. Yeah. I do wonder if this adds any sort of urgency to Congress to get a deal done sooner than later.
You would think,
You
right?
would think.
Mike?
You would think, but then again, this is Washington we're talking about. It.
Yeah.
It doesn't appear that we're significantly closer. There is some slight movement underway with the Treasury Department meeting with Nancy Pelosi, Stephen Mnuchin meeting with Nancy Pelosi, and the Democrats, in both the Senate and House, sending a new plan to Mitch McConnell, the Republican leader, yesterday. Nobody characterizing what's in it, but nobody seems to be very enthusiastic either. McConnell put out his own plan, which was very similar to his previous one that Democrats rejected. So at this point, we don't have any reason to think that necessarily we're going to get anything. That was the sort of theme of the hearing today, where Jay Powell and, Powell in particular said we need more help, we need more stimulus. And Mnuchin said he's open to it, but of course has to be on the president's terms.
Right. And New York Fed President John Williams saying today the U.S. economy is still in a deep recession. The pace of recovery next year would depend on fiscal policy and the timing of a coronavirus vaccine rollout. We know that. Hey, Dave Wilson, come on in. Market's a little bit lower today, but we're definitely off our worst levels of the session. What's up with that?
Yeah, we're also off the best levels of the session. We've kind of drifted down a bit in the last few minutes. So, put it all together, not a lot of movement, certainly not a lot of follow-through to the gains we saw yesterday. And it kind of looks like a market that's looking for leadership to some extent. There's sort of no clear theme emerging from today's trading. You look at the best performing stocks among the 11 main industry groups in the S&P 500, you see energy, okay? Which kind of makes sense. The area has done well lately, having a contrast to what we've been seeing for some time. And then you turn that on its head, look at the worst performer, raw materials. Yeah. So, which doesn't make sense because we've tended to see energy and commodity producers move together, in the past few weeks as there's been this sort of wholesale shift toward cheaper value stocks, that sort of thing. So, there's really no pattern kind of emerging here. And there's not a lot to kind of set up a pattern, you might say. Some scattered earnings reports are here and there. Certainly the deal that Salesforce.com made to buy Slack is getting people's attention, and not a good way for Salesforce.
Yeah.
The shares are down almost 9%, biggest drop in the S&P 500. Well, they had kind of a disappointing forecast for earnings in their current fiscal quarter, which didn't help matters either.
Right.
But you can find those sort of small stories. Big story is not a whole lot of direction here.
Dave, I'm so glad you brought up Salesforce, because that's certainly the story playing out when it comes to tech today. I mean, a massive acquisition announced after the bell yesterday, of course, to be expected.
Right.
But investors sending shares of Salesforce down more than 9%. I'm curious what the message they're sending is. Is this Mark Benioff paid too much for this company?
Well, I mean, it's coming at a time when the business maybe isn't performing up to par, in a sense, you might say, because at least not as well as analysts might have expected. And you have to consider, I mean, Salesforce has certainly done pretty well this year, even with today's decline, still up 35%. So, to the extent that people are kind of going back and, rethinking the numbers going forward, and then having to add in the effect of the Slack deal, you can understand why the shares are taking a bit of a hit here.
I would also think that this is Benioff saying to Microsoft, here, the ball's in your court. And you're going to see margins, probably. There's going to be a little bit of a pricing battle for folks who want to be on these kind of team platforms, right? Especially in a pandemic when so many people are working that way.
In the startup world, people love Slack. In the media world, people love Slack, but you cannot underestimate the power of Microsoft and
I was just
Microsoft
on a corporate
Teams.
call with chief marketing officers, huge companies who know their brand, and they're talking Microsoft Teams.
Of course, because they have decades-long relationship with
Yep.
Microsoft. How easy is it to implement Microsoft Teams when you've been using Microsoft Office for years?
Yeah, exactly. Hey, guys, thank you so much. Michael McKee, international economics and policy correspondent at Bloomberg News. Dave Wilson, our stocks editor at Bloomberg News. He's going to be back a little bit later on. I agree, but I mean, Benioff, man, they are really, I mean, it's an inquisitive company. They know how to integrate these deals, right?
Yeah, and finally, many people are going to be using Salesforce who never thought they'd be using Salesforce product, right?
All I can think of is the Salesforce Tower in San Francisco.
The thing's
which
massive.
is pretty impressive. Let's talk about the show. We got a lot of good stuff coming up. We're going to talk about the virus with Dr. Renee Duwa. She's founder and chief medical officer of HEAL. I grew up, actually, I was from a large family. I think you've heard me talk about it. But the pediatrician would come to our house. It's just the way they did it. And that's kind of what they're doing.
Yeah, and I want to hear from her about what she says about actually going to the doctor, because so many people haven't gone to the doctor because of the coronavirus outbreak. Carol, I haven't gone to the dentist since January. I probably shouldn't tell you that. I'm in a room with you.
You should go. I've even
I
had
know.
a root canal.
I'm like kind of scared to go to the dentist.
Go.
I'm not joking.
I will say, though, a headline crossing Angela Merkel of Germany saying Germany will extend its partial lockdown until January 10th. So we continue to see these headlines. We're going to get to presidential pardons. You and I and our team were talking on the morning call. There's a lot of interesting stuff going on around there. So we're going to kind of get to the lowdown on what prosecutors are looking into here in the U.S. and what are the rules on doing it. We've got the most read story on the Bloomberg. Gary Cohn of Goldman Sachs, formerly, playing hardball. He's like, I don't want to give my money back.
Who does?
Who does? Never get between an individual and their money. We have so much to come over the next 4 hours. So stick around, folks. But right now, we do want to get to world and national news. Headlines continuing to cross the Bloomberg. Hey, Nancy Lyons.
Hey, Carol, thanks. British officials are green-lighting the world's first shot against the coronavirus, approving emergency use of a vaccine that was developed by American drug maker Pfizer and Germany's BioNTech. Health and Human Services Secretary Alex Azar says it's a positive sign for the U.S. as well.
The approval of another independent regulatory body should give Americans additional confidence in the quality of such a vaccine.
The FDA wants 2 months of safety data before approving a vaccine, which is a requirement not necessary in the UK. Well, with shots possibly rolling out within a few weeks in the U.S., CVS and Walgreens are working on plans to administer vaccines in tens of thousands of nursing homes and assisted living facilities all across the country. Federal advisors yesterday urged that residents at long-term care centers be the first in line for the COVID shots, along with at-risk healthcare workers. The pharmacy chains will work with more than 50,000 centers that have enrolled in the program, with plans to start hosting clinics as soon as the vaccines are approved. President-elect Joe Biden is talking with workers and business owners today to learn how they've been affected by the pandemic. Georgia Secretary of State Brad Raffensperger says elections officials in his state are expected to finish a second recount of the presidential election by tonight's midnight deadline.
We have seen no substantial changes to the results from any county so far, and that's what we expected.
He says now it's time to move on and focus on the state's upcoming Senate runoffs, which are set for January 5th. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Masser along with Tim Stenovic, Bloomberg Quick Take, which you can catch at 9 and noon.
You can, and Carol, I got to be honest, you can't get away from me on Quick Take. So we're live at 9 and noon.
Is that a good or bad thing?
It's fine. It's fine. We're live at 9 and noon, but you can check out our replays throughout the morning and the afternoon as well.
Yeah, and I bet you talked a lot about the virus
And
today.
we're live at 4:30 and 5 as well.
Okay.
New shows.
Good to know. And I bet you guys talked a lot about the
yes,
virus.
we talked a lot about the virus today. Look, there is a lot of news.
I'm laughing, and I shouldn't be, because it's really serious headlines. But I do feel like we're making progress with the UK in terms of approving a vaccine, getting it out. People are talking about rollouts. We're starting to hear numbers about where it's going in terms of states.
Yeah, we heard today from Governor Cuomo here in New York that he expects Pfizer doses for 170,000 New Yorkers.
Sounds like a little, though.
It does. So 170,000.
That's the first thing I thought.
Sounds like a lot of people in basically any other city besides New York, right? We have more than 8 million people in the city. But remember, these are the most vulnerable people that are going to be getting this first. And that's who needs it, because they make up the majority of people who are their mortality is significantly higher when you get older.
Well, they're on the front line. They don't have a choice, right?
Yep.
They're going to work. We need these people to be able to go to work, to take care of people, who get the virus, but also routine, medical situations. We don't need a shortage of people. We need to make sure they're safe. So I'm totally all in on that. But it's interesting. So the UK becoming the first. We did have Cuomo talking 170,000. He says maybe by December 15th. But we're hearing about tighter restrictions over in Italy during the holiday season. I think this is what we're all kind of on pins and needles about, right, Tim? About what's going to happen over the holidays, the rest of the holidays.
Yeah, and I'm still waiting to see what happened because of Thanksgiving. And, the nice thing about people getting the vaccine early is that even if we don't have vaccines for healthy people, we will start to see the effects of those early vaccines soon.
Yeah, absolutely. And I thought what's interesting, too, the CDC coming out and cutting quarantine time for individuals exposed to the virus by as much as half. So this is just, we're learning so much more as we go along, right?
This is science playing out in real time.
Yeah, I always say it when we're talking to folks in the medical community, I'm like, we're really truly seeing how the sausage is made when it comes to these kinds of viruses and getting a vaccine. All right, you're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. This headline from the Bloomberg Professional Service. Pelosi, Schumer backing a bipartisan plan as a base for stimulus talks. Also repeating an earlier headline, German Chancellor Angela Merkel says Germany will extend a partial lockdown until January 10th. Stocks holding close to records, little change, lower right now in the S&P, down a point, lower by 0.1%, 3660, very close to a record. We've got the Dow down 31 points, down 0.1%, and Nasdaq is down 32. For Nasdaq, a drop there of 0.3%. Oil companies are moving higher along with the price of oil. West Texas Intermediate crude up 1.6%, 45.28 a barrel. ExxonMobil shares, they're up now by 3.9%. BP up by 4.4%. EOG Resources up 3.4%. Pioneer Natural, broad swath of energy stocks there. Pioneer National up now by 2.5%. 10-year yield 0.95%. Again, recapping equities lower, little changed. S&P down by half a point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I do love when you say swath, Charlie. I'm just going to put it out there.
It's not a word you hear every day, but
out of
listen,
your mouth, it's just perfect.
But you know what, though? I had to talk to Alex Steele about which energy stocks to include. She came back to me and said ExxonMobil, BP, EOG Resources, and Pioneer Natural. Indeed, a broad swath of energy stocks.
She's our energy guru.
Yep.
All right. Charlie, thank you so much. You're listening to Bloomberg Business Week. So it does feel like we're making some progress when it comes to the virus, although we did mention that headline out of Germany that they're going to extend their partial lockdown until January 10th. But Tim, I do feel like the UK becoming the first to approve a vaccine, right? And we are moving towards that logistics phase. We talked about this earlier. I do feel like we're making some progress.
Yeah, we are starting to see the light at the end of the tunnel.
Yeah, which feels really, really good. Let's see what our next guest has to say about that. She is back with us, Dr. Renee Dua. She's founder and chief medical officer of HEAL. It is really providing medical care in the privacy of your home. I kind of love to hear more about what they're talking and what they're doing. Investors include Lionel Richie, Qualcomm founder and chairman, or former chairman and CEO, Paul Jacobs, and also BET co-founder and investor Bob Johnson. So some really interesting investors backing them. Renee is back with us, joining us from Los Angeles. Renee, good to have you here. How are you?
I'm well. How about you? Thanks so much for having me on.
Yeah, we're doing okay. Just watching the headlines. What are you guys seeing out there on the West Coast and out in LA in terms of COVID?
Well, much like you're seeing, we are seeing rising cases. We are seeing, here in LA, we have a mandatory stay-home order, and it's going to go through certainly the children's winter break and probably into January. So a lot of the same things that you guys are going through as well.
Wow. Dr. Dua, how is it changing the way that you're providing care to your patients?
Well, luckily for us, we were always, in some ways, prepared for a pandemic, I suppose.
Wow.
It is
so
wild.
we built software that allows patients to stay home. We route and dispatch our medical teams to our patients' homes. We use remote monitoring devices, and we use telemedicine and video to see our patients and keep an eye on them, give them a very high-touch experience. So we are very busy, which I think is wonderful for the patients and wonderful for us.
Yeah, I want to make sure I understand this. You were doing this before telemedicine was sort of a household name, right? It was before
You're right.
everybody was telling you to download these apps so you could actually go to the doctor without going to the doctor.
Yep, you are exactly right. We always considered that having video accessibility to your doctor was a part of a coordinated care experience. And so we've had video and telemedicine capability for a long time so that our medical teams en route to a house call can keep an eye on their patients.
What's demand been like versus, the telemedicine versus people actually going to homes? Tell us what you've seen in terms of trends over the last 6, 7, 8 months.
Certainly. In the beginning, people were scared even to have us in the home, right,
Yeah.
which is understandable. But as things have loosened and we've come to understand how COVID operates as a transmissible infection, there are those patients who recognize the importance of having a physician do a proper examination and the importance of their screening examination. To give you an example, if a woman hasn't had her mammogram this year, it's an urgent matter at this point, at the end of the year, and we want to make sure a woman has breast cancer screening every single year. So I think patients are now feeling more understanding about us wanting to come into the home. They realize we wear PPE. They realize we're going to send them to a possible imaging center for a screening exam that we cannot do in the home, and they are accepting of it. And then to minimize risk, they're comfortable with a video chat or or allowing us to do a remote monitoring of their blood sugars or their blood pressure so that we can keep an eye on them without having to be in their living room.
Have you heard anything about getting a vaccine for yourself or for any of your providers who are going into homes? Because I was talking with some doctor friends over the weekend who work at a big hospital here in the city. And, you know, these are the people who are supposed to be getting their vaccines, and they haven't heard anything.
No, and I haven't, and my colleagues haven't. And you're right. We've been told we will be prioritized.
So how do they do it? I mean, if you haven't even heard about it, the last mile is supposed to be very tough.
Yeah.
It's the $1 million question. I think there's a lot of exciting activity going on the COVID vaccine. I think great progress is being made. I don't necessarily think healthcare workers will be prioritized by the end of this year, but it would be really wonderful in January.
You don't
certainly
think?
My colleagues that are working in hospitals, you know, they, God goodness, without them, what will we do, right? So it's an urgent matter.
We want to make sure we heard right. So you do not think healthcare workers will be prioritized this year when it comes to the COVID-19 vaccine?
How. We're already, I don't see how. We haven't heard anything. The news is that we will be.
Right.
But my own personal opinion, I don't see how we will be, with which vaccine. How are we going to roll that out? How are the hospitals being notified? You know, I'm on staff at hospitals, for example, and I haven't been informed as of yet.
I'm surprised about that. Although, I think that speaks to what we've all been talking about, how difficult it will be ultimately in, you know, the logistics and the distribution, and we still have yet to approve it.
Right.
That's the point, right? So what are we giving these healthcare providers? Is it approved?
Yeah.
How are we rolling it out? COVID cases are rising. So the same people that are working to build these vaccines and prioritize and approve are also susceptible to whoever is affected by COVID and their family members, right? So it's just this incredibly difficult rollout. I certainly feel for the people that are behind all of these efforts.
Hey, Renee, hang on for a second. Dr. Renee Duo, we're going to come back to her. We're talking with her. She's founder and chief medical officer of HEAL, on the phone from LA. And as we are speaking, headline crossing the Bloomberg, California reporting a record 20,759 new virus cases. Those numbers are just continuing to add up.
Records.
Yeah. All right, we're going to continue. It's really troubling when you see that. All right, you are listening to Bloomberg Business Week. Carol Massar, Tim Stenovic, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, you are listening to Bloomberg Business Week on this Wednesday. I'm Carol Massar along with Tim Stenovic of Bloomberg Quick Take. We're going to get back to the founder and chief medical officer of HEAL, Dr. Renee Dua. We really were kind of blown away by what she said about not expecting the vaccine to get to health professionals before the end of the year.
She's the type of person who should be getting the vaccine, her staff as well, so and they haven't heard anything.
No, which makes sense because we know this is tough in terms of distribution, but a little troubling. All right, we're going to continue that in just a moment. We know Charlie Pellet's standing by very patiently. Stocks taking an uptick. Maybe that's on that stimulus headline.
Indeed. Shot in the arm for the U.S. stock market right now. Stocks trading near records as a jump in crude oil prices pushes shares of energy companies higher. Also, investors are monitoring those stimulus talks. Let's get right to the numbers. S&P up 5 now. That is a gain of about 0.2%, trading near highs of the day. The Dow is up 31 points now, up by 0.1%. Nasdaq remains lower by 9, a drop there of just about 0.1%. Keeping an eye on the 10-year, the yield there 0.95%. Treasury yields up for a third day. Gold is up 0.8%, $18.29 the ounce. And West Texas Intermediate crude up 1.6%, $45.26 for a barrel of WTI. A new report out 30 minutes ago from the Federal Reserve finds the U.S. economic recovery remained moderate across much of the country and did show signs of a slowdown in areas where virus cases are particularly high. That's according to the Fed's Beige Book report. Stocks again trading near records. The UK becoming the first Western country to approve a COVID-19 vaccine, with its regulator clearing American drug maker Pfizer, and Germany's BioNTech a shot ahead of decisions in the U.S. and the European Union. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health.
You know, I think it's the first in many approvals to come for all of this work that everyone has been doing so hard to get these vaccines ready to go. I think we won't be far behind in the U.S. with Pfizer and Moderna already prepping their submissions for emergency use authorization. We're hearing that they'll be reviewed sometime next week. So it's exciting news for sure.
Moderna shares there up now by 1.7%. Pfizer advancing by 3%. BioNTech higher by 5.8%. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. CVS Health and Walgreens Boots Alliance are preparing to administer COVID-19 vaccines in tens of thousands of nursing homes and assisted living facilities across the country. Shots possibly rolling out in just weeks. Recapping, S&P up 6, a gain of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, much appreciated, Charlie. Thank you so much. Stocks really now at their highs of the level, and it has to be, as Charlie mentioned, on that headline that Pelosi and Schumer backing a bipartisan plan as a base for stimulus talk. So it does look like we're getting some progress there. Let's get back, though, to the virus, where it does feel like we do make some progress, but we still see some troubling headlines. Still with us is Dr. Renee Dua. She's founder and chief medical officer of HEAL, still with us on the phone from LA. Renee, I have to tell you that Tim and I were talking in the break, and we're just like, we were shocked when you said that you didn't think health professionals were going to get the vaccine by the end of the year, because it just feels like it's been moving in that direction. If indeed that's the case, when do you think realistically you could see you and your team and some of the hospitals that you're affiliated getting access to the vaccine?
I think it'll probably be January. Again, as we talked about, there needs to be an approval on which vaccine, how to transport the vaccine, how to roll out the vaccine to these thousands and thousands of frontline employees, you know, the respiratory therapists, the nurses, the doctors. There's so many people in a hospital that help take care of patients. We're all frontline, and so that's an enormous rollout.
Does the timing of how you think you're going to get a vaccine, does that change how you think the general population will be vaccinated? Will it still happen this summer, or do the challenges remain too tough logistically to roll this out on a widespread basis in the U.S.?
I personally think it's going to be logistically difficult, but I've seen it done before. I remember years ago when there was an H1N1 breakout, and there was a particular vaccine that was offered in my community. I was able to line up at a park and I was able to vaccinate myself and my husband.
Wow.
So I definitely think it's a possibility, and I remember just being so impressed with the efforts made and how much hard work it must have been to roll it out. I definitely think it can be done again. I think the value in starting with hospitals, hospital staff, and patients means that those zones become an area of safety for everyone. And I think from there, rolling out to general populations, of course, we're always going to have people who refuse to be vaccinated. So rolling out to general populations is going to be another interesting dilemma, but definitely will be done.
How much of that are you seeing among your own patients?
It's a great question, especially as it's flu season right now, and there's this suspicion that being vaccinated for the flu can in some ways help if you do get COVID and have symptoms of COVID. And so we are seeing, interestingly, more patients want to be vaccinated for the flu, which is wonderful. We do deliver flu shots to our patients who are our primary patients and use us for their physicals. So we are seeing that we can add those flu shots on for them, and we add them on for all the members of the home, which I think is a wonderful service that we are able to offer. And I hope, the pharmacies and the doctor's offices that work alongside with us are seeing similar use cases for the flu vaccine.
How do you recommend that people stay safe when they go to the doctor? You heard me joking about not going to the dentist since January. It's not a joke. It's actually true. What precautions are people taking when they're going to the doctor just for a checkup?
Right. And so first I would say if HEAL's in your community, you should use it, right? You shouldn't go to the doctor's office. But second, I would say if we're not in your community and you are going to the doctor's office, first step would be to take your temperature at home, make sure you don't have a fever. Second step would be to wait in your car with a mask on and call your doctor's office and ask if your doctor can see you and if you should wait until you can be seen. Third, I would avoid waiting in waiting rooms at all, right? This is the trouble with the doctor's office.
Yeah.
This is where infections happen. And finally, I would ensure that the doctor and the staff are all wearing PPE. They have face masks on. They have gowns and gloves. They're washing their hands, and so are you between visits. And finally, I would book your follow-up when you leave the office. So maybe give a phone call and schedule your follow-up outside and in the safety of your own car.
I got to say, I've done a fair amount of things, even gotten a root canal, Tim, and the medical community, all of them are taking it really, really seriously.
So you're saying there's no excuse for me not going to the dentist?
There's no excuse.
All right, I'll do it.
But I'll leave it for you. All right, Renee, thank you so much. Dr. Renee Dua, founder and chief medical officer of HEAL, on the phone from Los Angeles. Yeah, listen, and especially like routine tests, there were things I put off, and as soon as like June hit, July, went and had it all done because I was a little worried about what was going to happen here.
Well, that's going to be a big unintended effect or consequence of this, right? Is the the health procedures that people have put off, the testing that they've put off, and we're going to see that play out over the next few years.
Right, and you're hoping that somehow the numbers can be controlled because there are going to be people who need either going in for cancer treatments and so on, and you just don't want that healthcare system maxed out too much. All right, you're listening to Bloomberg Business Week. Let's get another check on world and national news. Over to Nancy Lyons in our 99.1 newsroom in the nation's capital. Hi, Nancy.
Hey, Carol. Lawmakers from both sides of the aisle continue to put forward ideas for a new coronavirus stimulus package. 3 possible assistance bills are in the mix. One from each party and then one bipartisan version. Senate Majority Leader Mitch McConnell's GOP proposal is the smallest at $500 billion. And Treasury Secretary Steve Mnuchin says it's the one most likely to receive approval from President Trump.
The President will sign the McConnell proposal that he put forward yesterday, and we look forward to making progress on that.
McConnell's bill contains a variety of measures that were rejected by Democrats, including legal liability protections to businesses. It also does not include major funding for state and local governments outside of schools. Lawmakers also need to fund the federal government by December 11th to avoid a shutdown, and Bloomberg's Amy Morris has more on their strategy.
Senate Majority Leader Mitch McConnell says lawmakers are likely to pass an omnibus funding bill and a coronavirus stimulus measure all at once. That sets the stage for a series of rapid negotiations in a lame duck session. McConnell says it is challenging and slow to move legislation, so a stimulus bill attached to an omnibus measure will likely come in one package. That's a lot of work and not likely to pass this week, so Republican Senator Richard Shelby says they'll try to get it done by December 9th. In Washington, I'm Amy Morris, Bloomberg Radio.
Newly released federal court documents indicate the Justice Department is looking into whether people tried to pay the White House in return for a pardon. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much, Nancy Lyons. This is Bloomberg Business Week. Carol Massar along with Tim Stanovic of Bloomberg Quick Take. This story, man, we've had like real estate stories. I think we've said this before every day.
Yeah, and I would not have seen this coming.
Why?
Back in March and April.
Pre-COVID.
Yeah, but the fact is that interest rates have stayed low and people want to move.
Yeah, I was just talking to a friend yesterday who is true, in the city forever. She and her husband, they have 2 kids. They were staying here. And they've been thinking about the suburbs, and they finally did it. They're like, especially under the pandemic, they're just outside New York. So it's happening.
Now, demand is so high that we have a story in Bloomberg that says that condo buying is booming as well because houses are getting too pricey because everybody wants to buy them.
Yeah. In New York's Westchester County, condo contracts up by about 24%. If you back out the Hamptons and North Fork on Long Island, they were up about 6.5%. And we've been hearing this about, there's a period where Greenwich, like they were talking about all these mansions like for sale because nobody, the financial guys were moving out. Nobody wanted to be there. Corporations had moved out, and now they're back in fashion.
Yeah, and even high-end condos in Greenwich pricing between $2 million and $3.99 million. There were 3 of those contracts.
Yeah, that's pretty pricey. And they talked about houses too. They talked about, let's see, you did mention the condos more than tripling in November from a year ago contracts. And a lot of the deals, though, below $1 million. But some of these high-end ones.
And look, it's back to what I was talking about yesterday and the idea that the pandemic has just accelerated many of the trends we were seeing. If I think about my own friends, and they were thinking about moving to the suburbs in the next few years. Right?
They have kids.
They have a kid. They have another kid on the way. They ended up buying a house a few weeks ago, and they just closed. So, and they're moving.
Right.
So that's what's happening.
And all I'm going to say is the next crop of kids coming out of college, and they're going to say, yeah, I'm going to go live in New York City. And I've heard so many people...
Because it's a steal, especially in Manhattan.
Especially right now. There are a lot of landlords who are saying, okay, knock off a month or 2, or we'll knock off these fees.
And here's a free Peloton, by the way.
And here's a free Peloton, which is another one of the COVID trends that we're seeing. But anyway, check out more Ashrat Carmiel. She follows all things New York City real estate for us here at Bloomberg. Always a great read. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks have turned higher, S&P at a record amid renewed optimism over stimulus talks and a jump in the shares of energy companies. Treasury yields up for a third day. The dollar is fluctuating right now. We've got the 10-year yield at 0.94%. S&P up 5 at 3667, up by just about 0.2%. Close to highs of the day. We've got the Dow up 38, higher by 0.1%. Nasdaq lingering near a record, down 13 now, lower by 0.1%. Again, we've got gold up 0.8%, $18.30 the ounce, in West Texas Intermediate crude up 1.5%, $45.21 a barrel, lifting energy shares. Recapping, S&P holding on to a 5-point gain, up by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Got it, Charlie Pellet. Thank you so much. So we've been talking, Tim, a lot about this past week, right? About the upcoming Airbnb IPO, which could be one of the largest this year. I mean, expectations are high.
Yeah, more than $2 billion is what they're planning to raise, and this company has seen quite a turnaround this year. It's been shocking the way they've been able to fix the business.
Well, that's such a good point. We talk about companies pivoting in COVID-19. So let's get to this story by Bloomberg News real estate reporter Patrick Clark, reporting for Business Week, talking about the company's ability to adapt during the pandemic. Patrick joins us on the phone in New York City, along with Bloomberg Business Week editor Joel Weber. Joel on the Access line from Brooklyn. You know, back in March, Joel, I wouldn't have thought we would have been like talking about an Airbnb IPO. That's for sure.
Totally, and I mean, we did. We talked to Brian Chesky, the CEO, even kind of mid-pandemic or a couple months ago at least, and I think even then we were hesitant to say if they were going to be a winner of the pandemic or not. But spin it forward a couple months, and here we are, and they're probably on the brink of an IPO, and they've really managed to adapt. And it speaks a little bit to their business model and how their business model is different from their peers and competitors, which they acknowledge in their paperwork, their pre-IPO paperwork. And, you know, that's why we asked Pat to kind of explain it all to us. So Pat, what allowed Airbnb to pivot and adapt when so many of their competitors have, frankly, not been able to do so?
I think it comes down to two things. You know, were they lucky or were they good? And they were a little bit of both. The pandemic has been really bad for the travel industry all over, but you know, even worse for airlines than for hotels, and worse for business travel than for people going on vacation. People have needed to get out of their house and, you know, get a change of scenery since they're spending so much time at home. And Airbnb, you know, despite trying to, or at least eyeing ways to get into, you know, either the air travel or sort of business travel businesses, they haven't really stood those things up. So in that sense, you know, there was no business there to lose. On the other hand, they've been pretty skillful at sort of steering into the demand that's out there. So they have figured out how to, you know, promote and, you know, find places for people to go get away that they can drive to. And some of those were already on their platform, but they've figured out ways to both expand that supply to meet the demand, and then, you know, to help their customers find those places. You know, there's only so many houses in the Hamptons, so where do they take you next when you can't?
But it has been a little painful for Airbnb. The company did have to lay off 1,800 workers. That was about a quarter of its total. The company had to cancel marketing efforts. Talk to me about the valuation, how it was cut just a few months ago when they raised debt, and then how much it expects and how it expects to be valued when it IPOs.
Yeah, it really speaks to the sort of whiplash nature of this experience. I think in April they went out and raised debt to shore up, you know, to shore up their finances because you know, the road ahead looked really perilous. And you know, and as of March or April, you know, the potential of going out into the public market and raising money through an IPO would have seemed somewhat far-fetched. So they they raised capital in April, and when they did, it valued the company at around $18 billion, which was down substantially from what the company had been worth in I think 2017, and it was valued at $31 billion in a funding round, and now at the upper end of the range that they are talking about pricing shares at in their most recent filing. I think it valued the company at upwards of $35 billion.
Wow.
So twice what it was worth in April, which is pretty incredible.
Yeah.
So, Pat, I got to ask about a parallel that you draw in the story, which I had not heard before. But like one actually sector in the hospitality business that's done an especially good job during the pandemic is sort of the budget hotel line. And one of the comparisons you draw is that actually that's a bit of a comparison as a competitor for Airbnb, at least from a price point perspective. But there's also that downside, which is that Airbnb has also been exposed to, where there's crime at the budget hotel side. Airbnb has this party house kind of problem, and that's been a little bit of a rain cloud on the IPO as well. Can you talk about how they're attempting to address that?
Well, I think I think Airbnb has, they've had these issues for a while, and they have attempted to address them for a while, and they do background checks. They won't let, I think in some cases, effectively they won't let people below a certain age, book houses in their hometown because it indicates they're not, going on vacation. But, if they're booking close to home, that indicates they may be looking like a party house, and they'll screen out some of those. So they take steps. The nature of their business is there's no clerk at the lobby desk, right? There's no lobby. There's no way to see. I mean, presumably there's some way, but there's no, they don't have hands-on personnel watching, who comes and goes into their listings. And as a result, that creates an environment for people to, do what they do, throw parties, and sometimes that leads, in bad directions. I mean, the hotel industry broadly deals with some of these issues as well, but it does, I do think at the lower end of the hotel industry, I think the problems are a little more rife, and it kind of goes back to the same question, right? It's like, do you have somebody? The hotels who have somebody at the front desk, kind of paying attention to what goes on the premise are less likely to have sort of rampant crime problems than a motel where, maybe there is no front desk. It's the old school motel where you drive up to your front door and you bypass the lobby entirely.
Right.
Or maybe, the hotel is just turning the other cheek because it's a type of business that is better than no business.
Yeah, it's interesting. I just want to know who just opened up the back door to let the dog in. One of you guys? I knew it. We knew it.
Carol called it.
Yeah, he was so clawing, and I was just like, I got to get him out. I'll do it really quietly, and maybe they won't hear.
I looked behind me to see if there was a dog coming into our studio.
Like, where's the dog? Where's the dog?
It's the joys of working from home.
We've all been.
You had maybe an Airbnb for your dog.
Exactly, exactly. Well, it's a great story, guys. Thank you so much. Really appreciate it. Joel Weber, editor of Bloomberg Business Week. What's the name of the dog, Joel?
Rocky.
Rocky.
Yeah. You can have him.
Rocky. All right, Pat Clark, thank you so much as well. Real estate reporter at Bloomberg News on the phone in New York City. Only because I know I'm opening and closing the door for the dog all the time.
You called that, Carol. You knew exactly what happened.
It's like an old-time radio show, right? Like, like the little sound effects. I think it's interesting. You and I were talking about Airbnb and like renting out your house or something, and my concern is like, how well do you screen these people? And especially if you're not home. I know people who rent rooms in their home. That's different.
Yeah, I'm not going to do it. I'm not going to do it, Carol.
Right. I'm not going to let Rocky in. Definitely not. All right. You are listening to Bloomberg Business Week. If you're listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, stick around because Bay State Business is next.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, December 2nd. It is a Fed Wednesday, and a Federal Reserve report is signaling the economy's prospects could be dimming as the coronavirus surges. And with more, here's Bloomberg's Vinny Del Giudice.
The Beige Book says economic growth stalled in places and business optimism waned. The report compiled by the Fed's 12 district banks also found evidence of troubled loans, especially in retail and leisure. The Beige Book will help shape the agenda at the Fed's next policy meeting in mid-December. Vinny Del Giudice, Bloomberg Radio.
Stocks have turned higher amid renewed optimism over stimulus talks and a jump in the shares of energy companies. The S&P's up 7 now, high of the day, up by about 0.2%. That is a record. We've got the Dow Jones Industrial Average up 63, higher by 0.2%, 29,888 on the Dow. Nasdaq down 5, little change, down less than 0.1%. 10-year yield 0.94%, down 630 seconds. Gold is up 0.8%, $18.29 the ounce, and West Texas Intermediate crude up 1.6%, up 71 cents a barrel. 45.26 on WTI. There is evidence job growth slowed in November as coronavirus infections increase. The ADP employment report showed a gain of 307,000 jobs, the smallest since July. The government issues its employment report on Friday. Aviation job losses have risen by about a third in the last 3 months after a resurgence of the coronavirus stalled hopes of a late summer recovery amid fresh travel restrictions. About 620,000 positions have now been cut since the COVID-19 pandemic began. This according to analysis by consulting group 5 Aero. Among some of the aviation stocks today, UAL, that's the parent of United Airlines Holdings, it is up 2.4%. American Airlines Group up 3.2%. Delta up 2.8%. Southwest rounding out the big four, up now by 0.7%. Lyft lowering its outlook for fourth quarter growth. Lyft shares, they are pushing higher today, up by 10.2%. Uber, crosstown rival in San Francisco, up 6.3%. Charlie Pellet, Bloomberg Radio.
This is Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Right, but for this Wednesday edition of Bloomberg Business Week, I'm Carol Masser along with Tim Stenovic of Bloomberg Quick Take. And this story, man, when it hit this morning on the right, everybody was talking about it.
Yes. How can you pardon yourself?
How can you pardon yourself, right? And we're talking about the news we got. The New York Times did a great story about President Trump discussing with advisors about granting maybe some preemptive pardons, at least according to those in the know. We've also been reporting that U.S. prosecutors are investigating whether several individuals offered political contributions in exchange for a presidential pardon, again, according to an unsealed court document. So someone who has a front seat to this, and you talked to him earlier, is Eric Larson.
Yeah, we talked to Eric on Quick Take earlier today, and the big part of the conversation that we focused on was the idea that what is the precedent for doing this, for pardoning people preemptively?
Yeah.
And in fact, it exists.
Which is kind of wild. All right, so let's get into the history. Eric Larson, standing by patiently, U.S. legal reporter at Bloomberg News, on the phone in Brooklyn. So what is the precedent for this, Eric?
Well, it really is. It is unprecedented. No president has ever tried to pardon themselves before. Nixon sort of came close after the Watergate scandal, but he was advised that that's not something that could be done. Of course, he was pardoned by Gerald Ford, but that claim by the DOJ that a president can't pardon himself was never tested in court. So it really does remain to be seen whether that old DOJ advice stands. And of course, Trump, it seems like a million years ago now, but in 2018, Trump tweeted that he had a, quote, absolute right to pardon himself. And certainly there are legal experts who back that up. There are others who disagree, but it really hasn't been tested yet. So we really just don't know.
What about when it comes to pardoning members of his own family if they haven't yet been charged with a crime?
Again, that is something that is within the realm of the president's power to pardon. It is a very vast power. There's not a lot of rules in there. As long you can't pardon, a president can't pardon someone for crimes that they have yet to commit. You can't just grant someone a get out of jail free card for life. But if there are crimes that they may have already committed, even if they haven't been charged yet, for example, potentially his children, then that is something that he could potentially get a preemptive pardon for. The risk there would be that the president would have to lay out in some sort of document what it is that he believes his people would be charged with.
That's what's kind of wild. Like, right, don't you want to see that document? Like, well, just in case my daughter gets charged with this or something, right? Like, you kind of, here's the list, everybody.
Yeah, you're giving a lot away about how you feel about somebody's guilt if you're pardoning them before they've been charged with something. I mean, pardons are used for criminals.
Right.
But President Trump has a way around that, I would think, in that he has called, all of these investigations involving him and others a witch hunt. There's a large portion of his base and other fellow Republicans who buy into that and might view a preemptive pardon as just a way to get around corrupt Democratic investigations. Not that that's what they are, but you could see that he might spin it that way, and that a lot of people might actually accept it, given what we've seen the last few years.
Well, and I do wonder, the prosecutors who are looking into this, who are these people specifically? And I just wonder in terms of leanings, as kind of friends of Trump or not.
Well, I mean, we've seen already that Trump is pretty ready to give out pardons to friends. As far as his family is concerned, really the biggest potential threats that you see legally are coming out of state investigations, particularly New York State and the New York Attorney General Letitia James.
Mm-hmm.
But of course, a president's pardon doesn't cover state crimes. So there's, even with all of this talk about a preemptive pardon for his family, that could potentially relate to federal crimes, perhaps things that were outlined in the Mueller report, obstructions of justice potentially, or something like that. But really, there's a big area of exposure there with the New York State crimes as well.
So what is the threat that President Trump and people close to him face from states like New York?
Well, the New York Attorney General has been investigating the Trump Organization over potential bank and insurance fraud, essentially misvaluing large assets in order to get some benefit, a tax benefit or insurance benefit or bank benefit. These were allegations that were laid out by the president's own former lawyer and fixer, Michael Cohen, in congressional testimony that sort of kicked off this New York investigation. There was a big fight over the state's subpoenas earlier this year. And just a month or two ago, Eric Trump, the president's son, was forced to testify under oath. He was deposed as part of this investigation. No one has been accused of any wrongdoing in that investigation. It's just a civil probe. But nevertheless, it does illustrate the kind of risk that you see they could potentially face, whether it's with the New York Attorney General or the Manhattan District Attorney or whatnot.
Do you anticipate we're going to get some news on actual or additional pardons soon, or is it going to be kind of in the 11th hour, in January? What are we expecting?
Well, I don't have any inside information on that, but I would have to say, just based on what we've seen about with this president, is that we'll probably see. This is just a guess, but we'll see a flood of pardon activity potentially that could, be right up into the last days or hours of his time in office, which isn't unusual. But given the way that Trump has used the pardon to create sort of controversy, you could see that it would be some big news when it happens. Clearly,
Eric, just quickly, can ever a presidential pardon be questioned?
I think that it can. When you're talking about a pardon for whether or not it's too broad, some investigators might want to rein in to say, well, this pardon doesn't actually cover this behavior, or as we said, the pardon of oneself, that remains to be seen. So if there's going to be a test of the pardon power, I could see it coming in the next few months.
It's just another interesting aspect of another, what's already been an interesting political year.
Yeah, and I mean, President Trump has expanded the power of the presidency significantly. And when we talk about precedent, he's set a precedent for how much power a president has, and it has been relatively unchecked by his own party.
Well, and some would say this whole use of executive orders, and we've seen it certainly under the Obama presidency, and that happens when you get gridlock in Congress, that's the only way the president can kind of move forward on some policies. And so...
And we might see it from Biden if Mitch McConnell and the Republicans hold on to the Senate in Georgia.
But this is wild, and I would expect that we're going to get a little bit more on that. Eric Larson, always wonderful in explaining what's going on there. Eric Larson, U.S. legal reporter at Bloomberg News, joining us on the phone from Brooklyn. All right, back to World and National News, and let's check in once again with Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. German company BioNTech says it is ready to ship out the coronavirus vaccine that it developed together with Pfizer to Britain in the next few days. Britain is the first country to approve the vaccine for emergency use and expects to start giving out doses by next week. BioNTech's Chief Commercial Officer Sean Merritt tells Bloomberg the company is ramping up production.
We've added a factory which we bought from Novartis, completing in October, and we're bringing that up to speed. That once it gets into steady state, we expect that to produce 750 million doses per year. Pfizer at the same time are bringing up their manufacturing as quickly as possible.
The CDC, meanwhile, is revising its quarantine recommendations for those who are exposed to COVID-19. CDC now says people could leave quarantine without a test if they don't experience symptoms 10 days after exposure or after 7 days with a negative test and no symptoms. The White House press secretary Kayleigh McEnany is refusing to say if and when President Trump will admit defeat in the election. Yesterday, Attorney General Bill Barr said his office had found no evidence of voter fraud. But McEnany says the president still has a few irons in the fire.
The president has said that he believes all legal votes should be counted and all illegal votes should not be counted. And in fact, the campaign is pursuing that litigation. I can't get into the details of that litigation here, but they still do have active cases in Nevada and Wisconsin.
President Trump's campaign has lost nearly 40 court cases and has provided no proof of election fraud. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Oh, to be a fly on the wall, because we just had a really great conversation, Tim Stenovec and me, about Bob Iger, and we were talking about Disney. The reason is Chris Palmieri, who is our LA bureau chief, has a story on the terminal. You can check it out at Bloomberg.com, but it's about Walt Disney's Bob Iger, longtime CEO, now chairman, or I forget what his special title is.
Yeah, executive chairman.
Executive chairman, that he would consider a job in the administration of incoming U.S. President Joe Biden if the right position came along.
And it's so interesting to hear that, given that there were murmurings of whether or not he would actually run for president in 2020, which obviously didn't end up happening. But you know, who knows how he would have fared.
There's always been a little bit of politics around him. I know when I spoke with him, we did a deep dive for TV and radio inside Disney a few years ago, and there was speculation that he might run for mayor of New York. And at that point, you know, it wasn't necessarily on the table. But there's also, you know, so it's interesting to see that this could be a possibility.
Okay, so what position within a presidential administration do you think would be a good fit for Iger?
I have no idea.
I don't know either.
What do you think?
I have no idea either. I mean, he could be some sort of special envoy, but given his background in running a business that spans the entire world, that has big roots in Asia, we could see him in some sort of ambassadorship. I don't know.
The story doesn't say it, does it?
No, and that's what.
That's like I'm thinking commerce now. That's kind of a little dry for him. I mean, this is somebody who is, you and I were talking in the break, really visionary. When I interviewed him, we also did a deep dive on Pixar. Like, he understood taking these brands and then just, you know, moving them around the platforms. They were in the parks, there was merchandise, there were movies. You know, Marvel, like what he did with that franchise is pretty incredible. And he let them run as their own entities. ESPN was its own thing up in Connecticut.
And everybody thought Disney was too late to streaming. And guess what? They weren't. And I was shocked to see him step down from the CEO role so quickly after launching Disney Plus. And look at what's happened to Disney now with the theme parks and the way that it struggled during the pandemic.
And now really focusing and saying that they're going to do that deep dive even more so into streaming. We'll stay tuned on this one. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at records on the S&P, trading close to session highs. It is a mixed day, though. The Dow higher, Nasdaq lower. Let's head right over to the first word breaking news desk for today's afternoon call. And here he is, Bailey Lipschultz.
Good afternoon, Charlie. As you said, stocks are lingering near record highs as investors kept an eye on stimulus talks. The Dow is up 60 points, S&P higher by 5, while the Nasdaq is off 5 points. U.S. 10-year yield is at 0.94%, and small caps are higher by 5. 6 of the 11 main S&P sectors are trading higher, led by gains in energy and communications, while materials and real estate led to the downside. Nasdaq Biotechs dropped 10, transports gained 60, semis added 10 points, while the VIX is unchanged. Leaders in the Dow, Boeing, Chevron, and Walgreens, while Salesforce, McDonald's, and Home Depot are the worst performers. In deal news, Salesforce fell the most since March on plans to buy Slack in a deal worth about $28 billion, and NetApp surged as second quarter results beat expectations. Regarding vaccines, BioNTech and Pfizer rallied after their shot was approved in the UK, and Merck sold its stake in Moderna. Wrapping things up, it's another busy day for software earnings with results from Snowflake, CrowdStrike, and Zscaler after the bell. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey. And to hear live breaking news over your Bloomberg type Squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That is the Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. It is time for the Bloomberg Green segment brought to you by PGIM, the investment management business of Prudential. Join the pursuit of outperformance at PGIM. Learn more at pgim.com. That's PGIM.com. So let's get to our weekly Bloomberg Green segment. It's a deep dive into how the new energy giants are, well, probably not what you might expect, especially in a week where ExxonMobil is about to incur the biggest write-down in modern history. We are definitely, Tim, seeing the energy world turned upside down.
The acceleration of trends. I can't say it enough. It's what's happened during the pandemic.
I love it. I love it when it comes to certainly the renewable companies. So let's bring in Brian Eckhouse. He's energy reporter at Bloomberg News. Let's get more on his story. He joins us on the phone in Los Angeles. So Brian, good to have you here with us. Tell us a little bit about your story, because the new energy giants, they're not the ExxonMobils of the world. They're the new or the renewable companies that have really made great progress and great strides.
Yeah, absolutely. These are companies that are greatly utilities that may not be the household names like an Exxon, like a BP, like a Shell. It's Enel of Italy, Iberdrola, Nextera, which is a big utility base in Florida. It's Ørsted. These are companies whose market caps increasingly are rivaling that of the big oil majors, but their names are known mostly like in Florida or in their home countries in Europe. But they prioritize, buying and building of solar farms and wind farms when it was still very expensive. It was alternative. And now much of the world is increasingly going toward clean power. And these companies, these utilities that invested early on when it was expensive, they're kind of positioned now for this growth that's happening right now in the U.S. and elsewhere.
So what did they see when the big energy companies weren't seeing? What did they see that they didn't see?
I don't know if it's not what they didn't see. It's more because they're already in power. They're the ones that were
sort of like the innovator's dilemma, right? You don't want to cannibalize your own business.
Perhaps a little bit of that. I think also these are companies that are tasked with making sure that our lights are on at all times of the day. BP, Exxon, Shell, they're companies that really worked over the world to find oil, to find gas. Different part of the energy world, but increasingly as we move to electrify more and more things, cars, homes, et cetera, the energy world, whether it's electricity or the ones that pulled oil and gas out of the ground, it's increasingly becoming like one world.
Well, I got to say, before we got going, Brian, I was reading to Tim, I said, I love this. Renewables are now, this is in your story, renewables are now the cheapest form of new electricity in most of the world. I mean, I remember years ago, houses with solar panels on them, it was really cool, it was really new, but they wouldn't sell. It just wasn't as viable. And we really turned a corner, Brian, when it comes to this.
Yeah, absolutely. For a long time in the U.S., particularly when it came to rooftop solar, it was really boom and bust based upon the availability of subsidies.
Mm-hmm.
If they go away, there'd be a rush to get panels on your roof before they went away. Now we're seeing a little bit more steadiness to this. And during the pandemic, rooftop solar has done pretty well. There were questions if there would be installations able to be done back in March and April.
Right.
But by June, a lot of the companies that do rooftop solar turned the corner, doing things remotely in terms of getting inspections and sales. So they're actually in for a banner year. We're looking at a record year this year for rooftop solar in the U.S.
Wow. I mean, that's surprising given that the way that the Trump administration actually made it difficult and more expensive to buy some of these products to put on your roof. I wonder, Brian, how the economics have shifted in recent years for these renewable companies. What has made it more affordable for these types of investments to be made? Why has it accelerated during the pandemic?
I mean, a big reason is that rooftop solar at large, wind, it's a lot cheaper. In a lot of the U.S., solar and wind is the cheapest form of electricity. Not everywhere, but a lot of places. Even in Texas, wind has dominated for a very, very long time. And the last 18 to 24 months, solar has really boomed there and is looking at a major wave.
I mean, we can't
of development.
we can't ignore the symbolism of that, right? Texas, this is a state that was built on oil.
Right.
Absolutely. And in fact, to that point, we're seeing solar power actually electrify oil operations in West Texas.
That's great.
There's an interesting integration going on there, which you wouldn't have thought of 2 or 3 years ago.
Hey, listen, just got about 45, 50 seconds. China, we talk about they continue to build coal plants, but they are some of the largest owners of wind and solar capacity, right? And will likely continue to be. So they are playing a big role in all of this.
Yeah, absolutely. China is a dominant player in solar, particularly. A lot of the solar that comes to the U.S. is either made in China, or more likely it's made by companies that are China-based, done elsewhere in Asia. China is the definite global leader when it comes to solar in terms of their own installations and how they produce panels that are put in elsewhere, including here in the U.S.
Brian, I can see reporting on the energy majors, right? We've gone from those old traditional big oil companies and the integrated oil companies, and we're now going to be talking about these kinds of companies going forward just quickly.
Yeah, but we're still going to see the big oil companies, play a role going forward.
All right.
So it's a bigger field.
Good stuff, though, and good to have on our radar. Brian Eckhouse, thank you so much. Energy reporter at Bloomberg News on the phone from L.A. West Coast, did you see a lot of solar, when you go back home?
A ton. My parents installed it a few years ago. It made sense, yeah.
That's great. I love it. I love it. I'd love to see more renewables as much as possible. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week. Carol Massar along with Tim Stenovic. Bloomberg Quick Take doing like his 20th hour on broadcast.
I love it.
We're lucky to have him. Coming up, we're going to do the chart of the day. You're 2 for 2? No, 0 for 2? 2 and 0? How do you say it?
I'm 0 for 2 right
0 for
now,
2.
and let's try to go for 1 for 3. I did cheat yesterday, though, Carol, and I got it, and I cheated.
I'm sorry.
So I'm still going to say
it's a bad habit, and I'm sharing it with you. We're going to get to Dave Wilson and his chart of the day in just a moment. First up, back to your top business stories and a check on that trading day. Hey, Charlie.
Well, hello there. 28 minutes to go ahead of the closing bell. The Senate has voted to advance Christopher Waller's nomination to serve on the Federal Reserve Board, clearing the way for final confirmation tomorrow in what could be President Trump's last chance to shape the central bank. Stocks edging higher. S&P at a record amid renewed optimism over stimulus talks. Also a jump in the shares of energy companies. Let's begin with crude. It is up by 1.5%, 45.21 WTI. West Texas Intermediate up 66 cents a barrel. The 10-year yield 0.94%. Stocks higher. S&P up 2 points now, up by about 0.1%. The Dow up 48, up 0.2%. A retreat for Nasdaq down 20, a drop there of 0.2%. Nasdaq 100 index down 0.1%. Russell 2000 is up by 0.2%. The United Kingdom has become the first Western country to approve a COVID-19 vaccine, with its regulator clearing the American drug maker Pfizer and Germany's BioNTech shot ahead of decisions in the U.S. and European Union. The emergency authorization clears the way for the deployment of a vaccine that Pfizer and its German partner have said is 95% effective in preventing illness. The shot will be available in Britain from next week. For medical professionals and logistics experts, the big challenge now is actual distribution and inoculation. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health, and she was interviewed this morning on Bloomberg Television.
In these first phases of the prioritization, where we're trying to target these most high-risk populations, there will probably be vaccination stations set up. But for the general public, we'll have a system in place where we can get them in, get them vaccinated, make sure we have rigorous documentation on what vaccine they got and when their booster should be, because they're all going to be slightly different for the different vaccine types that are out there.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares up today by 3.2%, BioNTech up by just about 5.1%. CVS Health and Walgreens Boots Alliance are preparing to administer COVID-19 vaccines in tens of thousands of nursing homes and assisted living facilities across the country, shots possibly rolling out in just weeks. Today, CVS shares, they are advancing up by 3.1%. Walgreens Boots Alliance up by 3.7%. Recapping, stocks mixed. S&P up 5, up by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic, and this is Bloomberg.
Talking heads, right?
It's got to be Talking Heads. Talking Heads, right?
Right.
Woo!
Okay, wow, we actually got that.
Yeah, but Tim got it.
We got it. So I'm 1 for 3. That was thank you for making that an easy one.
Well, I'd say it's 1/2 for 3. The other half is getting the song title.
Oh, fine. Stop making sense?
No, you think so.
Yeah,
wait.
would.
It's actually the title of a live album that featured that song.
I don't remember what they were saying. What were the lyrics?
He was just saying stop making sense.
The title
Stop
didn't
making
show
sense.
up in that particular piece of it. Called Girlfriend is Better.
Oh, yeah. I would have
I
never
got a
gotten
girlfriend is better than that, etc.
Okay.
I'm trying to remember if David Byrne did that song in the American Utopia show on Broadway. I suspect he did.
But Stop Making Sense is the title of a Talking Heads movie, right?
Right.
A very, very
good one. That's what I'm saying. The live album was based on that movie. Yeah.
Okay. All right, so there we
we're
go.
all on the same page.
Here we go.
Good.
Not bad.
It's getting better.
Week's halfway over.
Got it. All right, so Dave, take us to make the connections. What's the connective thread to your chart of the day?
Well, you could argue that if you look at stock valuations, at least for some people, they don't make sense. In fact, Jim Reed, who's over at Deutsche Bank, put out a chart today that focused on the CAPE ratio, cyclically adjusted price earnings ratio. This is the indicator developed by Yale University's Robert Shiller.
Right.
That's based on average earnings over 10 years. Okay, so it's not your typical price earnings ratio, but it's a variation on it. Well, I came across this commentary on that was published earlier in the week on Project Syndicate, which Shiller writes for, and he and two other co-authors looked at something called the excess CAPE yield. Let's break it down. So you take the CAPE ratio, right, and then you sort of turn it on its head and come up with an earnings yield. So if you've got a CAPE of 30, it works out to 3.3%. So it's 100 divided by the ratio. Okay, so that's your starting point.
I'm like back in college, economics. Go ahead, Dave.
Look, what you're trying to do is figure out how much yield you get on stocks relative to bonds. And in both cases, you're adjusting for inflation. So, you take like the 10-year Treasury in the case of the U.S. and then adjust it for the inflation rate and come up with what's called a real yield. Okay, so when you run those numbers now, or at least when you look at the latest data, which Shiller puts on his website,
right,
you come up with a gap of 3.9 percentage points favoring stocks over bonds. Well, you go back, the chart actually goes all the way back to 1900, but if you focus on the last 50 years, it turns out the average gap on a monthly basis, 3.8 points. In other words, it's practically the same as where we are now.
So stocks aren't as expensive as people think.
In relative terms. I mean, we're talking about a relative value indicator here. People have to make decisions. In absolute terms, historically, stocks might be expensive. But, you've seen the argument come up before that, relative to bonds, it's not such a skewed kind of a comparison. And it's just a different way of kind of looking at things. I mean, if you're going to make a decision about where to put your money, it's the sort of thing you have to do.
Right.
And if you want to take a look at what Shiller's numbers are saying, send me an email. I'll get you the chart. The explanation goes with it. And everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
I mean, it's a good indicator. A lot of people follow it, right? And it maybe explains why, once again, we're seeing some of those names that everybody said, oh, no, we're done. We're seeing rotation, but, you're seeing money pile back into them.
Yeah, I mean, it's all part of the mix. The CAPE ratio is a whole lot more popular from Shiller.
Yeah.
This is a relatively recent
CAPE
creation,
yield, you're right.
The whole kind of yield comparison argument, yeah, that's definitely been out there in different forms over time, and it's really part of the mix when you try and figure out what to do.
A little Shiller, a little talking heads. Who'd have thunk? Bob Shiller would be very happy, I think, about that connection. Dave Wilson, I'm just saying.
I hope he would.
All right, good stuff. I know you're going to come back a little bit later on with your stock of the day. Dave Wilson with his chart.
And thanks for going easy on us, Dave, with the song.
Do you think he went easy?
Yeah, that was totally
okay.
Easy.
It was a gift. Let's get a check on world and national news. Back over to Nancy Lyons at D.C. Hey, Nance.
Hey there, Carol. Britain has become the first country in the world to authorize a rigorously tested COVID-19 vaccine, and it could be dispensing shots within days. BioNTech's Chief Commercial Officer Sean Merritt tells Bloomberg they are ramping up their production.
For all countries, we're producing and will have ready up to 50 million doses this year, and we will be sticking to that target.
He says they're adding factories to handle the increase in demand. Federal Reserve Chairman Jay Powell and Treasury Secretary Steven Mnuchin are urging Congress to approve COVID-19 relief funds without further delay. House Speaker Nancy Pelosi and Senate Minority Leader Chuck Schumer now say they will support a $908 billion package released by a bipartisan group of lawmakers. Ronna McDaniel is launching her bid for a third two-year term as chair of the Republican National Committee. Bloomberg's Nathan Hager reports.
The GOP did better than expected in U.S. House races despite President Trump's loss on November 3rd. In her letter to the RNC's 168 members, McDaniel says she has the support of President Trump, as well as Senate Majority Leader Mitch McConnell and House Minority Leader Kevin McCarthy. The president endorsed McDaniel about a week after Election Day. That could give him more sway over the party as he considers another run for president in 2024. In Washington, I'm Nathan Hager, Bloomberg Radio.
Arizona Democrat Mark Kelly was sworn into the U.S. Senate this afternoon, shrinking the Republican majority. It is now 52 Republicans, 48 Democrats. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. We had to convince Tim to do this story. I don't know. You got a problem with Bill Ackman?
I got no problem with Bill Ackman.
All right, just check it.
It's
just
the
check
footsie that I have the problem
It's
with.
the footsie. Well, listen, this is kind of interesting. We've talked so much about Tesla, right, being dumped into the S&P 500. This is about a fund run by billionaire Bill Ackman, hedge fund. We know it well, Pershing Square Capital Management. He's going to join the UK's blue chip stock age, and we're talking about the FTSE 100. Who'd have thought?
I know. And, Carol, the reason why I said, I don't think you're missing it. I think the fact is the FTSE as an index is completely underperforming U.S. indices. And look at this. It's down more than 14% year to date, whereas the S&P 500 is higher by 13% and the Dow higher by 4%.
And apparently it's a global company because the Pershing fund is incorporated in Guernsey, in the Channel Islands. I was trying to figure out how they do that, right? But so it's interesting. So we'll probably be looking at this fund a little bit. And you do wonder how to kind of skew the index because we know this is someone who's played with Starbucks, played with Chipotle.
In fact, Chipotle is its biggest equity holding as of August 25th. Lowe's companies as well. So the takeout food chain accounts for has been up by 55% this year, whereas Lowe's is up 26% just in 2020.
He was pretty aggressive on some of these names. I mean, that's what he does, right? He gets involved and as an activist investor, and I think he might have pared back some of his Chipotle holdings. But I got to tell you, I'm going to actually sit down with the CEO of Chipotle tomorrow.
Okay, I didn't know if I could talk about that. Is this public?
I don't know.
All right, well, you heard it here first.
So
you got a big interview.
We're going to hear from a lot of people. But I have to say, I've talked to him on our air here, and I mean, he has done such a phenomenal turnaround for that company. Took off like a rock, the stock last year, also running higher this year. But what's interesting is, I mean, it's a focus on digital, and he really helped the company bounce back from all of those, food problems.
And he came from Taco Bell.
He did come from. He loves
moved the
this
company's
stuff.
Headquarters to California from Colorado, where Chipotle was based, and he has done incredible things for the company.
Yeah, exactly. So stay tuned. That's all I'm going to say. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. With the Dow, the S&P higher, Nasdaq lower, S&P at a record amid renewed optimism over stimulus talks and a jump in shares of energy companies. West Texas Intermediate crude up 1.5% now, 45.20 a barrel among some of the energy names. ExxonMobil up 4.2%, BP up 4.3%, EOG Resources up 2.8%, Pioneer Natural Resources up now by 1.7%. S&P up 6 to a record 3668, up 0.2%. The Dow's up 66 points, up by 0.2%. Again, best level for both the Dow and the S&P. Nasdaq remains lower, down 11, a drop now of 0.1%. Gold is up 0.8%, 18.29 the ounce, and the 10-year 0.94%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
Yeah, how about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, folks, we've just got about 11 minutes left in today's trading session. Tim, we're kind of hovering near our highs of the day. I think people are upbeat about maybe some stimulus ultimately. I don't know.
This could maybe happen.
Maybe. Yeah.
Who knows? Can't see the future.
Don't count your chickens yet. Or your eggs or whatever it is, right?
Yeah.
Chickens before they're hatched.
Yeah, that's right.
Let's bring in Kirk Hartman. He is President and Global Chief Investment Officer at Wells Fargo Asset Management. They've got $607 billion in assets under management, and they're looking at all kinds of asset classes. Kirk certainly oversees all of them: fixed income, factor-based, quantitative. He is with us on the phone from Los Angeles. It's a little bit of a wacky day, Kirk. How are you?
We're doing fine. California is a bit of a lockdown with restaurants being closed, but otherwise, we're doing as best we can.
Yeah, I do wonder. It does feel like, we've all been like, we've seen this movie before. We know what happens if we don't start to rein in and shut things down. And it does feel like officials are closing things down pretty quickly, which I think a lot of people and health professionals would probably say, yep, that's the right thing to do.
Well, I think that's right. Obviously, the concern, we all want the virus to slow down, is the effect on the economy. And, you worry about restaurants and small businesses and, those types of issues.
Yeah, I wonder when the issues that small businesses are having, that restaurants are having, when does that start to have an effect on the U.S. economy, and then traders actually see that as a risk for stocks?
Great question. There's clearly a disconnect between the normal life and the markets. I think what's very interesting is that the small caps, which to me are a much better of the broader economy, have come back very strong. I mean, we were down
big time,
40%, and now we're up 10%. So small caps have come back a lot, which hopefully is a sign that the smaller business world. But we'll have to see. But look, everything is predicated on a great rollout of the virus. So my concern is that the rollout doesn't go as smoothly as everyone hopes, because clearly these markets now are pretty much priced for perfection.
Well, and what's interesting is you can talk about small caps. I mean, they had quite a run in November, longest run that we've seen, or biggest bounce we've seen in some time. Small caps, though, are not kind of, I think, small business America. And I do wonder that disconnect, Kirk, that we continue to see between what's going on in Wall Street, which is one thing, and then what's going on in a lot of America.
I agree with that. In fact, I had the same thought a couple minutes ago, that small caps are obviously public companies, and they are probably behaving somewhat differently than the private companies and the smaller companies. 50% of the U.S. economy is smaller business.
Right.
So that's why I think everyone is so worried and concerned and hopeful that we get another stimulus package.
If we don't, what are your expectations? Because I do wonder then, do we fall into even a deeper recession, and it's going to be one that's going to be much more difficult to come out? And then ultimately, that will drag down everything.
Well, that is the concern. I think that with low interest rates and the Fed committed to low interest rates, and I think the expectation of some kind of stimulus coming is probably pretty good, especially with Georgia elections coming up in January. There's pressure on both parties to come up with something. So I am optimistic, but very much so. Either a slowdown on the rollout of the vaccines or a another turn down for small business could be very damaging.
What if the yield curve continues to steepen?
Well, I think the yield curve will continue to steepen, which is helping the banks. And I think that it's important to remember that almost a third of the small cap indices are banks. So a steeper yield curve is very good for financials and banks, which I think is why it's powering the financials and the small cap.
So where do you want to be in this market environment right now? Where I feel like, Kirk, depending on the day, people are like, okay, we're seeing a rotation in the markets. Oh, nope, we're seeing a return back to, the momentum players. So what is your best guess, especially when we know it's probably going to be a tough month or two through, until we get through the holidays, get through this next wave of the virus, and as we wait, for the vaccines to come out. We heard earlier from a guest, Dr. Dua, who's out there on the West Coast, saying specifically she didn't expect healthcare professionals to get the vaccine before the end of the year, and their priority.
Well, I think we all have to hope that the healthcare professionals and the primary caregivers get them quickly. Yeah. I think that the market will do okay. I think that we all know the vaccine is coming. It's just a matter of time. And you saw the good news out of Europe. So I think that that is a very positive sign.
Okay.
And, you go ahead.
I was just going to say, I want to talk history here and go back to the flu pandemic of 1918 to 1920, because as you were talking to our producers, you talked about how that was followed by the Roaring Twenties, which I think if we look at any sort of historical context here, what can that tell us about how you're thinking about these Roaring Twenties, which I have to say, Carol, did not go off to a great start.
No, didn't we fall into a depression after that?
We did, but 2020 has been, I think, the year's not over yet, but it's fair to say this has been like the longest year of my life.
Yeah, exactly. Kirk, what do you think?
Well, the historical analogy, I think, is very apt. The 1918 and 1920, you had 600,000 Americans die because of the flu pandemic. You had the Roaring Twenties, but you then had the Great Depression. And I don't think we're going to have a Great Depression, but I do think we are going to have to deal with the debt. So there's no question in my mind that there's so much money in the system. Our money funds have gone from $100 billion to well over $200 billion. There is a lot of money on the sidelines that's going to go to work. The question is, we have clearly borrowed from the future to pay for the present, and understandably so, but we're going to have to pay the piper at some point. So that's the risk that's looming out there.
Right, and especially with expectations of some more maybe relief, so that deficit just goes up a little bit more. Kirk, thank you so much. Really appreciate it. Kirk Hartman, President and Global Chief Investment Officer at Wells Fargo Asset Management, $607 billion in assets under management, on the phone from Los Angeles. Like, I remember for a long time, Tim, the deficit hawks, and we would just talk about it ad nauseum.
Remember them?
Well, it's just like we would constantly talk about U.S. debt, and then I remember the downgrade not so long ago, right? Just a few years ago. And I'm just thinking, and then we kind of got away from it all.
Carol, I think it's political.
You think it's, what do you mean?
Yeah, Republicans love to go after Democrats who increase the deficit, and we had heard nothing of that over the last 4 years when President Trump ran up the deficit to record levels. And we're about to start hearing about it again from Republicans when Biden gets to office.
Yeah, so get ready, right?
Yeah.
All right, folks, we've just got about 3.5 minutes left in today's trading day, and it's been an interesting one, Tim. We're off our lows of the session. We're going to probably finish just off our highs of this session. I think there is expectations that maybe we get a little bit more relief out of Washington. You're listening to Bloomberg Business Week. Carol Massar, Tim Stenovic, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Wednesday, December 2nd. Folks from OGE Energy ringing that closing bell, and a record for the S&P 500 index. This update brought to you by Witham, a forward-thinking advisory and accounting firm helping clients to be in a position of strength in the new reality of business. Learn about their innovative solutions by visiting witham.com. S&P up 6 to 36.68. That is a gain of 0.2%. The Dow up 61 points, also up 0.2%. It was a down day for Nasdaq, falling 5, down less than 0.1%. The Nasdaq 100 index eking out a gain of less than 0.1%. Russell 2000 up by 0.1%. Stocks edged higher amid renewed optimism over stimulus talks and a jump in the shares of energy companies. Treasury yields up for a third day. The dollar fluctuated. Again, S&P up 6, a gain of 0.2%. S&P at a record. So, just what are the concerns for investors with the S&P up 13.6% so far this year? Kirk Hartman is Global Chief Investment Officer at Wells Fargo Asset Management. He was our guest moments ago, right here on Bloomberg Business Week.
Everything is predicated on a great rollout of the virus, so my concern is that the rollout doesn't go as smoothly as everyone hopes, because clearly these markets now are pretty much priced for perfection.
NetApp surged after earnings. Biggest gainer in the S&P 500 index, reporting second quarter results that beat expectations. NetApp shares up today by 9.4%. Salesforce.com and Slack both fell following the announcement of their $27 billion deal. The acquisition gives Salesforce a popular workplace communications platform in one of the biggest tech deals of the year. Salesforce down 8.5%, Slack down 2.6%. Recapping, S&P at a record up 0.2%. Charlie Pellet, Bloomberg Radio.
Wild thing, think you move me.
I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking, must
on Bloomberg Radio.
All right, time to take a little bit of a deeper dive into the markets. Carol Master along with Tim Stenovic here in our Bloomberg Interactive Brokers studio. So I'm going to start big picture a little bit here, Tim. Look at the S&P. And a little bit of an even split, a little bit of a more bullish tone. 275 names in the S&P 500 higher today, 229 lower, one unchanged. If I look at the 11 major industry groups in the S&P 500, also somewhat of an even split. Energy, once again, atop that list, where energy has seen so much pressure, and they're either, I feel like, at the bottom of the pack or the top of the pack. So top of the pack today, followed by financials up about 1%, communication services up about 1%, materials were your worst performing major industry group in the S&P, down about 1.4%. So, that's kind of what the trade was like.
Split day.
A split day. And it wasn't until really, we were off our lows when we kicked off, but when we got that stimulus head, we did take a little bit of a leg up, a little bit.
And like we were talking about, it remains to be seen whether or not a stimulus deal actually happens by the end of the year. But
right.
It seems at this point that obviously investors are optimistic about it, and I wonder to what extent they're pricing it in right now.
Yeah, especially when you think about all the Fed officials and everybody who's saying, listen, we've done pretty much everything we can do.
Yeah.
It's up to you guys to do some kind of, fiscal, basically providing money for businesses and individuals. We can't do that, right? So, should we talk Salesforce?
Let's talk a little Salesforce.
So Charlie mentioned Salesforce was down about 8.5%. Slack, which it is buying, was down about 2.6%. But if you recall, about a week ago, when the rumors started flying about Salesforce maybe buying
Slack.
Yeah. Sorry, the synapses aren't firing today. Slack was up like 37%. So a lot of the expectation already built up.
Right. The expectation was there. It was reported early, so this wasn't a surprise.
Exactly.
But what's interesting to see today is the reaction from investors when it comes to Salesforce. Because are they just wondering, hey, did Mark Benioff pay too much for this company?
Right.
Salesforce shares, as you mentioned, down, close to 9% today.
Yeah, exactly. So we're definitely seeing some selling. Let's talk about Spotify.
I'm so excited.
I know. I should have
okay.
just.
Yeah, this is the one we should have led with.
I was making him wait. So Spotify, let's talk about it, up 12% today.
Yeah, Spotify is up 12%. Now, the reason is because Joe Rogan has become exclusive to Spotify, according to Bloomberg News. It was as high as much as 16% earlier in the day. It fell off of those highs at the close. The podcast from Joe Rogan became exclusive to the platform. But what I want to talk about is the buzz that's being generated by this 2020 end of the year feature.
Yeah, you were talking about this. What is this?
Okay, so basically, if you open your Spotify app in the last couple of days, you'll have this custom page made for you that really looks a lot like a long Instagram story. And what Spotify has done is they've taken all the data from what you've listened to and come up with what you've listened to the most, what genres you've listened to, how it's changed from previous years, how you compare to other listeners. And everybody is sharing this on social media. Spotify has done a great job of making it easy to share. At the bottom of each one of these pages, there's a share this story.
Curated your list.
Exactly.
And then sent me a check for $10,000 because that's my data.
Yeah, exactly. I was going to say, are you one of the most streamed artists on Spotify? Are you getting paid by Spotify?
I mean, listen, I think it's a really cool thing, and I think most people will think it's a cool thing, but that gets to that bigger story about who owns that data. That's
so
valuable.
True. And it's so true, Carol. And Spotify was really early to being able to harness this data to serve you music that you're interested in. Apple Music was late to this, and that's why I still think that Spotify is among the industry leaders, because we're not going to discover music the same way that we used to, right? We're using these apps. We're not talking to friends in the same way, right? We're finding music on Spotify.
Exactly. Listen, they've definitely disrupted. I hate to use that word. It's overused, but I mean, they really have in terms of the music industry. It's pretty remarkable. How do you feel? Like, my husband and I used to have TiVo, and, back in the day. But it was, you'd watch something, then all of a sudden they started to like, oh, maybe you'd like to watch this, or maybe you'd like to, and part of it was like, okay, that's kind of cool. Part of it was like really creepy.
I think we're desensitized to it. I mean, I think Netflix has done a really good job with this, because it's sort of made that its selling point. Like, we know what you want to watch before you know you want to watch it.
Yeah.
And
creepy.
Look, it's creepy, but we're not looking as much as we had to previously.
So, Joe Rogan, what do you think he's getting paid? Is there any numbers?
Oh gosh, I don't have this off the top of my head, but I believe that it was reported when it was like $80 million. Don't quote me on that.
Everybody who ever says like, oh, you want to do a podcast, you should do it like Joe Rogan.
Yeah, well, I mean, the numbers that he gets are just mind-boggling.
And the guests he gets.
It's like higher than cable. It's like you think somebody watches a lot of Fox News, right? No, it's Joe Rogan gets more viewers or more listeners than single leading cable network does.
All right, well, that was fun doing Spotify. It's still a little creepy, all that data. All right, you're listening to Bloomberg Business Week, and this is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson! All right, Mr. Wilson, come on in with your stock of the day. What do you got for us?
iRhythm Technologies, Carol. The company makes a heart monitor called the Zeo. Patients wear the device for as long as 14 days and then mail it to iRhythm. The company analyzes the data and sends a report to the prescribing doctor. Now, iRhythm was founded in 2008 and went public in 2016. The ticker is IRTC. This year, the shares have jumped as much as fourfold as the company has posted narrower quarterly losses than analysts expected. iRhythm retreated today in response to a decision on Medicare and Medicaid reimbursements for next year. The U.S. agency that runs the healthcare programs didn't set a national payment rate for products such as the Zeo. The rate was left up to local contractors. The ruling led to concern for some iRhythm analysts that 2021's reimbursements might not increase the way they expected. Citigroup reacted this way in a note, and I'm quoting here. To say that this is a surprise at this stage of the process is an understatement. There were certainly some investors who were surprised. iRhythm shares fell more than 20%. That was their second biggest decline ever, and the largest was a 21% drop back on March 16th.
That's going to hurt, right?
Yeah.
Oh, yeah.
Unbelievable. Well, that's what happens, though, in terms of those reimbursements. It can make or break a company. We've seen it time and time again. Dave Wilson, thank you so much. Bloomberg Stocks columnist Dave Wilson. Check out also his chart of the day, which he gave earlier. You're going to desert me.
That's it. I'm sorry.
Something I said. The Spotify? Was it the data comment?
No, it wasn't. Don't worry.
Busy day, good day. I know you're going to take a break. I'm going to be busy with the big Business Week B50 event, and then we're going to come back on Friday.
Friday. We almost made it a week, Carol. Not yet.
Sounds good. We're almost there. All right. You have a good evening.
Thanks. You too.
All right. You're listening to Bloomberg Business Week. We're going to continue, and right now we do want to get a check on world and national news. For that, over to Ed Baxter in San Francisco. Hey, Ed.
Hey, Carol. UK Prime Minister Boris Johnson is announcing the COVID-19 vaccine is now being distributed.
The virus has got to be stored at minus 70 degrees. Each person needs 2 injections 3 weeks apart. So it will inevitably take some months before all the most vulnerable are protected.
In the U.S., HHS Secretary Alex Azar says the country is ready here.
That means we can make our first shipments of vaccine to states this month. And we are on track to be able to ship enough vaccine for 20 million Americans before the end of the year.
But New York Governor Andrew Cuomo says it's not just a snap of the fingers.
There has to be funding to administer the vaccines. It's not enough to say, we'll deliver them to your state. That's very nice. FedEx can deliver them to the state.
Meanwhile, the White House is defending its large Christmas party in defiance of warnings from top U.S. health advisors. Spokeswoman Kayleigh McEnany obviously believing that 2 wrongs do make a right.
If you can loot businesses, burn down buildings, engage in protest, you can also go to a Christmas party.
Correct me if I'm wrong. Did she just put having the party in the same group as looters? California today has set another case number record, over 20,000 day to day. The CDC has shortened contact quarantine to 10 days if there are no symptoms. Iran's top political chamber has now given final approval to a bill forcing President Hassan Hussein to end the international nuclear inspections unless key sanctions are lifted by February. In San Francisco, I'm Ed Baxter. This is Bloomberg Radio.
All right, Ed Baxter, thank you so much. This is Bloomberg Business Week. Carol Master joining me right now is the lovely Charlie Pellet. And man, we see an airport story and we all think, or maybe you think, this is a story we've got to do.
I love airports. When I fly,
know.
one of the things I try to do sometimes is get connecting flights to places that you wouldn't actually think
I love
that you'd need to connect.
airports too, you know that? I love wandering around them. It's crazy.
I do too, but JFK to London, there's one way to get there for most people. Not me. I try to go via Toronto or Zurich or Geneva or Amsterdam and spend time in the airports. More takeoffs, more landings, more frequent flyer miles, and more airports to explore.
So this story, courtesy of Wall Street Journal Dow Jones, says slow recovery seen for JFK Airport's busiest terminal. And so I guess they said that their passenger numbers might not return to pre-pandemic levels until 2024. And so they're scaling back, I guess. They've been doing a big refurbishment and expansion, so they're scaling it. They were going to do $3.8 billion, but they're scaling that back, Charlie.
Yeah, and in essence, as I read the story, my reaction was, quote, can you blame them?
No.
Part of the reason being is they're also waiting for federal money, too, that may or may not come through. And that also will affect, plans for reconstruction. Got to say, though, LaGuardia, depending on which terminal you fly, it's looking good these days.
Oh, have you been there recently?
I have, roughly a year ago, coming in on a Delta flight, and it got a whole bunch better.
Man, well, listen, don't you remember, who was it? Oh, man, I can't believe
it was Joe Biden.
Right, it was Joe Biden, right? He said that it was like a third world airport.
Yep, exactly.
Well, listen, this is what we've talked about a lot on our air, and you've done a lot of stories. I've done a lot of interviews and stories too, and it's just about like infrastructure spending and really shoring up some of our airports, some of our roads, and this is really part of these kinds of projects. We've just got to work on them, Charlie.
Exactly. One additional aviation note, guess what? You can no longer take emotional support animals such as peacocks, alligators, or pigs. They're going to be banned from flying from the Department of Transportation. Just wanted you to know.
What will Poppy my peacock do now?
I know, and if I'm in 12A and you're in 13A and all of a sudden we got an alligator, we've got a problem.
We've got a problem. All right, Charlie, thank you so much.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet, and we do begin with earnings news after the bell. Today we did hear from Snowflake moments ago. First earnings since its debut. Snowflake shares down now by just about 5%. Third quarter revenue coming in at $159.6 million. Estimates on Snowflake there, $147 million. PVH is the retailer reporting third quarter adjusted